Good morning, everybody. It is Friday, September 6th, 8:21 a.m. We are officially here live earlier than usual because in the next 9 minutes, we will be having one of the most consequential and important jobs reports that we've had all year. This is the report that we've all been waiting for, that we've all been looking for. This is the report that's going to determine the trajectory of, honestly, the next year. I know it sounds crazy because it kind of sounds like it's too much. It's hyperbolic, but it is true. Like, this report really is going to determine how the Fed thinks about policy and the Fed thinking about their policy in terms of raising or not raising, but cutting by 25 or cutting by 50. We're definitely not raising anymore. The labor market is getting way too weak to raise. That's going to be the topic of discussion. And so the Federal Reserve has rates right now at 5.5%. Core PCE, which is their preferred metric of inflation, is at 2.5. So it's more than double the core inflation rate that the Fed looks at. And we know it's time to cut. But the only reason it's time to cut is not only because inflation is coming down, it's also because the labor market is starting to weaken. So today's job report is going to show us how much is the labor market weakening or how strong is the labor market. And those numbers are going to give the Fed enough guidance to figure out what they should do when it comes to the broader unemployment rate and when it comes to how they want to proceed in terms of monetary policy. So it's a big number. It's a big number. A lot to talk about, a lot to discuss. And in about 8 minutes, we're going to see what happens. Now, my perspective on this, thank you everybody for being here this morning. I think it's going to be decent. The reason I think it's going to be decent is because kind of yesterday we saw a little bit of a rotation back into tech. I think some people also feel the number is going to be decent. I do think that number, even if it's revised in a couple months, we can't do anything about that. But I think if it's going to be revised down, then it's going to be revised down in the next couple months. But if the market's judging on what's going to happen today, then I think that number is not going to be revised down today, meaning it's not going to be as bad as kind of we think it is going to be if it's going to be revised in the future, which, again, it's a crappy thing because you kind of got to believe it for the time being. But it is what it is. I do think we're going to get closer to 125, if not above 125. Last time in July, the reason the market freaked out again, August 2nd, which is what caused the collapse from the yen carry trade August 5th, they kind of all compiled on each other, is because we came in at 114,000 jobs, which was much below expectations. One could say the hurricane kind of played a role into why we had so less jobs. We didn't have any hurricane in August, to my understanding. So as long as we're good, then in 7 minutes, I think we get closer to 125, maybe 130, 35. Consensus, and I think I'm lowballing. Consensus is 160,000. So the market is expecting a decent amount of jobs. Maybe we get that, maybe we don't. But we're going to see today. We are going to see today and end up deciding or end up seeing what the Fed is going to have to do. Thank you, everybody, for being here. Daniel, Bhaskar, Kevin, Katie, Jeremiah, Ray, Jason, Kite, Walt, Broccoli Bob, Sanjay, Vishal, Benny, Nick, Gene. Thank you, everybody, for being here today. You guys thought I would oversleep, right? No way, bro. I wouldn't. Dude, I never oversleep. We did it once, all right? It was done in the past. It happened 5 months ago. Remember, guys, the reason I overslept last time is because I was up all night. And I didn't stay up all night this time. I actually slept, I set I put up like 4 alarms. And I had some random dreams, dude. But in the dreams, the alarms were going off. So like this time I just like woke up immediately at like 7 a.m. And I was like, all right, let's get into it. Will says I was late instead of Amit. Yep. Will, you were late. You guys were the ones who were late. Yeah, we had no faith in you. Not today, bro. This jobs number really matters. Now, I did wake up and I was reading some stuff. The market, let's take a look at the market. We got 5 minutes until this number comes out. The market is down a little bit. Broadcom just got hammered, down 7%. Broadcom, I thought they had a good earnings. We'll talk more about why they're down, but market's not loving them. S&P, I saw this. Market was down at 545 at one point in the pre-markets. And there is something I saw potentially that's leading people to believe there's another version of the carry yen trade or yen carry trade going on. Take a look at this. I'm still doing some DD on this. I have to kind of read through, but some of you guys might have saw this morning. Chinese banks have built $100 billion short against the US dollar to prop up the yuan, and hedge funds are eager to get in on the trade. At the center of it, all these transactions are known as foreign exchange swaps. These have quietly become a key tool for state-run Chinese banks seeking to prop up the yuan during periods of outsized selling pressure. This is an article that came out literally this morning on Bloomberg. This is what it is. And they're kind of making an argument that there is another, not yen trade, but other type of trade that has implications for the yen based on the yuan that's happening in China. I have not read this article. I saw it this morning. Didn't get to fully go in deep into it, but this is one of those things that's, I think, kind of freaking out the markets a lot. I mean, the S&P was at 545 in the pre-markets when I woke up, and I was kind of confused why. And this is what I saw. This might be the reason. This might not be the reason, but I mean, I hope there's not another carry trade going on that's creating all this pressure. I just want to end the year with our gains and like be peaceful. Like, I just want to get our gains in 2024. We all got some good gains. we want to end it for the year, take some profits, and chill out. And it's the market's like, it's tough. It's tough to get through the year and finally get, it's not a slow, sort of gradual grind. We kind of got all the gains really quick, and now it's like a fight to keep it. It's not a fight to kind of get to that next level because the market did so well. So now's the question, will the market collapse 10, 20% and will it wipe out the year's gains, or can we hold on to it? And this jobs report in 3 minutes is going to determine a lot. Again, I don't know if this is a repeat of August 2nd, but we'll figure it out. We'll see. The market will definitely figure it out pretty soon in terms of how bad or how good it is. Palantir also today, really important day for Palantir. S&P 500 inclusion potentially. I tweeted this yesterday, but I had a friend text me a screenshot of them buying 300,000 shares of Palantir. And so it's $11.4 million. And they were like, well, I hope they get into the S&P 500 tomorrow. And I was looking at the text like, motherfucker, dude. Like, some people have so much money. They're just playing around with it, bro. Like, literally just playing around with money. And I was like, I hope they too. I hope they do as well. He has a pretty big Palantir position. He's had a lot of Palantir shares for a while, so it's not like his average is $30, but yeah, there's some people in the world that have lots and lots of money. All right, here we go. We've got 2 minutes. Oh boy. This is going to be the number. 2 minutes, folks. We're going to see. I kind of feel like I've built up so much hype to it that I'm not even that much hype anymore. Like I've been thinking about this number for like 3 weeks now. And now I'm kind of just like, well, I hope it's good. Better be good. Like, all my excitement is like not there anymore because I've been hyping it up so much. But I hope it happens. Thomas says, what's the likelihood on S&P? I don't know. I think we can get in. We definitely can get in. I don't know if the committee will allow us yet because of the lower institutional holdings. If we don't get in, I don't think the stock tanks. Some people are saying, the stock is only propped up because of the S&P inclusion. I'm like, I don't think that's the case, dude. I think we'll be all right. But, I think the stock's propped up for other reasons besides the S&P inclusion. All right. So how much time do we have? We have 10, 15 seconds. Let's pull up the number. Let's see what we're looking at, folks. Today is what? September 6th. Today's September 6th. All right, here we go. Consensus is 160. You see it right at the top. We should be getting it pretty soon. This is the moment. This is the time. We've all been waiting for this. Let's see what we get. Canada average hourly wages at 4.9%, previously at 5.2. Okay, that's fine. Oh boy. Oh my gosh. 142. 140 freaking 2. That's not horrible. Unemployment went down to 4.2. Unemployment went down to 4.2. Oh my God, that's not bad. That's not horrible. I know the market was expecting 160. The forecast was 120. So technically it's a beat. That's not bad. How's the market reacting? We're green. We're mother effing green. We're not super green, but we're green. Yeah, look at the S&P. We were down 0.5. Now we're down 0.3. We're green. We're green. 142 is not horrible. It's not horrible. It's not amazing, but it's not horrible. It's not below 100,000 or anything like that. It's not below 120, 142. I mean, it's kind of in the middle of, some people wanted 160. Some people, I thought it would be 125, right in the middle. Right in the middle. I don't think the market has to moon on this news at all. I don't think the market has to go all the way up, but I definitely don't think the market has to go down. 142, unemployment's down to 4.2. I mean, that's not crazy. Let's look at some of these other numbers. I think that means 25 bips. I think that means 25 bips, correct? 142, unemployment at 4.2, averagely our earnings month over month 0.7, consensus was 0.3. That's actually good. Average hourly earnings year over year 3.8, consensus was 3.7. That's a beat. 62.7% on the labor rate participation. That's kind of the same that it was before, so that's fine. Government payrolls were 24,000. Manufacturing payrolls, we lost 24,000. That's bad. Non-farm payroll privates was 118. Yesterday we had 99 from the ADP, so we had about 19,000 more than from the ADP. So we had 118, and then government was 24. That's how you get 142. Look, I'm not saying it's amazing at all, but I'm not saying it's horrible. I'm not saying it's horrible, and I don't think the market needs to collapse on this. Market might still be down on this. Market might still be down. Yeah, I mean, that initial green candle now back to kind of normal, the way it was right before we got these numbers, but Robinhood right here in 1961. This is not, 5-6% down. Oh my God. Recession. Even Tesla's up on this news somehow. 230 on Tesla. Tesla's getting exciting, dude. Tesla's holding up really well. Berkshire's down a little bit. Eli Lilly's down. Yeah, I mean, market's down, but it's not really. Going into this, you thought, people thought things would collapse. It's not amazing, but it's not horrible. 10 years down. Okay, so people are buying up bonds right now. Yeah, 10-year just fell. 10 years at a new 52-week low, 3.659. Again, if you're just joining, payrolls came in at 142,000, less than about 160, but higher than the consensus or the projection at 120. Again, I think the market's going to have to sit with this a little bit, but I do not think this is the worst thing in the world at all. These are relatively decent. Let's get some coverage on this, and then we'll keep analyzing.
About in the 7 o'clock hour, that happens a lot. Plus the idea that you have these downward revisions, you have the ADP number led you, as I said before, people discounted. I think they're wrong. It led you in the right direction. And I'm just going to very quickly check what's happened to the Fed funds probabilities here, because we were on the cusp of a 50 for September.
Not enough for anything.
It's going to refresh. Yes, now we're just barely 51.49 on a 50 now.
Okay.
We flipped from 57. Now, what happens, Joe, this is very interesting, this has been happening the whole time, is now the probability of a 50 in November becomes a probability of a 25.
Just because it's going to add up to 100.
The market is darn set on 100 between now and the end of December, and it just shifts around how it gets there, but it's really at 100, maybe a little bit more now. Now you've got a 68% probability of a 50 in December. So look, 100, 100 and a quarter, I guess, is now where we're talking about. So a little bit more easing. And I can do one other thing here, which is check what we're looking for a year from now and looking for 6 months from now. So if I look at the September 2025 Fed contract, I get a error rate. Nope. Yeah, there it is. Okay. So 3%, right in 3% 1 year from now. So the market now is priced at 240 to come off the Fed funds rate as a result of this number.
Right.
Numbers seen this week, it's going to raise questions about where the economy is. But once again, for a normal economy, 142,000. I have not a chance to look at the household survey to see what happened to the unemployed. I'll do that while you're talking to our brilliant guests.
Get to our panel.
Yeah, dude. I mean, we'll get back to that in a second, but 142,000 is not horrible. Colorblind Collector says the average hourly earnings is hot. Correct. It is hot at 0.7%. Market wanted 0.3. I don't think that's enough to. That's on the month over month. Year over year is kind of in line. I don't think that's enough to create inflation reacceleration. At this point, inflation's coming down. I don't think the market. Look at oil. Oil's below 70 this morning. You would think oil would be above 70 based on OPEC deciding to not start production for the next 2 months. Oil's still coming down. But I think the average hourly earnings is not enough to create some massive reacceleration inflation. So I don't think the Fed cares about that. Really, the Fed at this point, and we've seen Bostic, Goolsbie, all these guys talk about S&P is recovering a little bit as well. It was down 0.5%. Now it's down. Look at S&P. It might go green right here. All these Fed presidents have been talking about the labor market. So I think they are fully convinced, even if they're not fully saying that they're convinced, but they're convinced inflation is done. They've spent 18 months, more than 18 months fighting it. They've done it successfully, and slowly by slowly, it should come down. Without shelter, inflation would be 1.9% right now, right? It'd be below the Fed's target. Now it's about the labor market. And it does kind of seem like the labor market is weakening, but it's holding up. Look at Tesla, dude. Wow. Tesla's up 2%. Anyway, why do you guys think Tesla's up 2% on this? What's your logic here? Because this is a growth stock. It's pretty speculative going into a number that wasn't amazing. It's not like we added 200,000 jobs, and it's a company that is going to put up bad delivery numbers in comparison to what they had last year. So I think I'm saying all the negatives here because the only reason I think it's going up right now is because the market's definitely getting excited for 1010, and they're probably rotating out of some of their winners like an Nvidia, and they're coming into Tesla. Alex is because people are buying. Correct. That is a mid-level analysis because people are buying. But the point is, dude, Tesla, if Tesla ends even at 235, it's going to be up almost 15% for the week, or about 12% for the week. So that's pretty incredible. That's pretty incredible. Psych Pilot, thank you for the 5 gifted memberships. I appreciate that, man. You didn't have to give those. You gave those yesterday. I appreciate you, brother. Thank you for the 5 gifted memberships. I can see in my chat, Ryan, Broccoli Bob, Jeremiah, Victor, and Adele, you got 5 gifted memberships. I didn't even know YouTube gives them out randomly. I thought you guys had to claim them, but YouTube gave them out. So thank you for that, Psych Pilot. Appreciate it. There you go. Nvidia just went green. Oh my God. Nvidia just went green. Oh my goodness. Oh my goodness. Oh my God. Nvidia's just green. Nvidia just went green. Where's the S&P? S&P's like 10 cents, or it's $1 from being green. It's down 0.08%. Market's buying, folks. QQQ's ready. Oh, Robinhood. Wow. Robinhood 1977. Up 0.56% right now. For those that missed the big Robinhood news yesterday, they are having an event in October called The Legend Awakens. And the whole theme of the event, just like the theme of their gold event in March of 2024, was introducing legendary products. It's a 3-day event. It's not even like a 2-hour. It's a 3-day event. So over 3 days, I think they're about to unveil some features that are going to be fucking crazy, dude. I think they're going to be legendary. So that's big for Robinhood. Coinbase is up a little bit, 2%. Bitcoin is up about 0.25%. Nvidia's green. Intel's up 1%. Palantir's up 0.5%. We'll see the S&P inclusion news today after hours at 5:15. And then Tesla making a run for 235. Where's the VIX right now? VIX is down a little bit. It was up 8% yesterday. It looks like it's down right now in the pre-markets as we get this news. Well, no, it's still up. It's up 8. It was up a little bit more. So it's still up 8%. It's up. It was up yesterday as well, but it's up 8% right now. We'll see if that continues to stay up as the market potentially goes forward. Wow. Look at the S&P. It's about to turn green. If it can keep going. This is not too bad. For those that just came in, non-farm payrolls, 142,000 versus 160,000 expected. Unemployment rate came down to 4.2% from 4.3%. Again, I don't know if we can really believe these numbers, and I have sympathy for those that say they just don't believe anything. I get it, but if this is all we can believe in, then this is what we have to look at. But let me just be clear. This is not the type of jobs report that the Bears wanted. The Bears wanted 50,000 jobs, 60,000 jobs, 70,000 less. And I agree. If we had, less than 100,000 jobs, I would agree with the Bears. I'm like, all right, you guys are right. Like, we're just not adding that many jobs. It's recessionary. This number is not necessarily recessionary. It's not amazing, but it's not necessarily recessionary either. Robinhood's up 3%. Holy crap. Is it? Is it really up 3%? No, it's up 1%. It's up 3% from yesterday, but okay, let's get some more coverage. And then we'll keep going. Let's see what else we got.
Betsy, Allison, and Sarah, and Betsy. So the 4.2, which you explained why it was going to happen, combined with the 141,000 in the revisions, not great, but nothing's falling off a cliff either, which may have been the whisper number and the worry among some.
Well, I did take a look at the household survey already, and the household survey on one hand is reassuring in that we do see employment growth there as well. That's roughly of the same magnitude as what we're seeing in the employer survey. And as you noted, the unemployment rate ticked a little bit down from where it's sort of high of July. But the bad news in that household survey was we saw the participation rate really coming down. If I'm looking at this report, I see.
Did it really come down? The labor force participation looks kind of the same, unless I'm reading it wrong. Let me pull it up. At 62.7, I think it's relatively the same. It's not down as dramatically.
Some big signs of weakness. First of all, we tend to see when an economy is weakening that the revisions go downward. That's what we saw here, was revisions downward, and that's a sign of a weakening economy. Obviously, unemployment rate coming up, which we saw last month, but not this month.
No, she's wrong, dude. July was 62.7. Look at this. July was 62.7. August, it came in today at 62.7. I'm looking at 62.7 for August. So she's wrong that labor force participation came down. It from what I'm looking at, it did not come down.
And then the participation rate coming down, and the number of people who would like to have a job, but they've sort of given up, so they're not in the labor force, going up, and the labor force participation rate going down. That's that sign that people are finding it harder to find jobs. You just had the New York Times run an article about how hard it is for recent college grads.
Hey,
so
Betsy, I have to interrupt you. I have the participation rate unchanged at 62.7. I know we all look at this data really fast, and I make my share of mistakes. I just want to make sure people know. Maybe for certain groups, I have it unchanged at 62.7% in August.
Well, thank you. That is my mistake. I think
no worries. We just try to get it right.
Awkward. I feel for her. I've been in the same situation, dude. I feel for her.
As best we can. It takes a village.
Yeah. You are right. I actually looked at the male participation rate. So
those men, lazy, it's the women who've been powering the increase in participation and keeping it there. That is just a fact.
Yeah.
Damn, that kind of messed up her bearish rant, dude. That just kind of messed it up a little bit. All right, let's see what some other people had to say as well.
If that was the case, we risk reigniting inflation, which would bring up a whole host of other problems. So I expect the Fed to be cautious, because I think they're going to see this as a move towards more normalization, because while it's a weaker labor market, it's not necessarily a bad labor market compared to what's normal.
Alice, I just want to follow up on that. I think you make a really great point here, which is what's the point of the cuts? And maybe you've nailed what the difference is between the outlook for the market, that the market thinks the Fed needs to cut to buoy the economy, and the Fed thinks it needs to cut to get back to neutral. And there's different magnitudes of cuts in each one of those explanations and different speeds. If you're hurrying to buoy this economy, you got to get there in a hurry, and you got to cut quick, and you got to cut often. If what you're doing is going back to neutral, I'm in an economy that's in the middle of a soft landing and still doing okay, you can take your time. All the research shows that.
Yeah, I think what we have is we have a generation of people in markets who've never seen a Fed try to, wind down contractionary policy. We've only really seen the Fed go hard to sort of buoy the economy. We're in the midst of a recession. So I think they only understand one speed, when really, this is sort of new for all of us, and certainly, anyone under 50. But they're used to the Fed going really hard, when really, just sort of taking their foot off the gas, when it's not even really clear to me that the high rates we have right now are really acting as a contractionary force on the economy at all, which is, again, something that people are debating.
She's bugging there. The high rates are absolutely acting as a contractionary force. I get her point, though. Like, we haven't seen the Fed act this tight in a while. But just look at the labor market, dude. We're adding 100,000 something jobs a month. We were adding 500,000 a couple of years ago. So I definitely think there's some contraction going on. Like, this report is not horrible. 142,000 for those that are just joining. Unemployment went down to 4.2%. It's not amazing, but it's not catastrophic. And today was a day where either it was going to be catastrophic or amazing. It ended up being kind of in the middle, which is something that tends to happen. And that's why the market's kind of just flat on this news.
But you can be young and a historian and an author of books like you are.
Yeah,
Allison, and then you would know.
I once said, Sarah, did you leave, Sarah? You're so patient and so nice.
I'm still here, Joe.
Thank you. So, with all this in mind, what does it make you think to do in equities and fixed income?
Well, first of all, I think this number proves that July payrolls were not an anomaly, including the revisions that we've seen downward. Does it lay to rest the debate that the Fed is behind the curve? No, I think we still have to worry about that. Given the average hourly earnings and next week's CPI and PPI, the Fed may still start with a cautious 25 basis points. Now, looking at the market, September for the last 4 years in a row, and historically, the second half of September is seasonal.
We just got that quote from Colorblind Collector. I'll pull that up, but Fed Williams just saying now it's appropriate to lower the Fed funds rate. If that's a specific quote, I think the market's going to like that. I think they are absolutely confirming it's time to lower rates now.
The worst period of the year for the markets. I think markets are going to remain cautious because they are concerned now that economic data is continuing to deteriorate and the Fed is going to be late. So I think it's going to be a challenging month. The defensive stocks that we've seen leading the markets recently are probably going to continue to lead as the market waits to see where does this all end up in terms of the economy. Do we end up in a recession? Our view is that we do. Within fixed income, I think that's where you're going to be able to get your cash off the sidelines and find yields. Fixed income tends to perform well during rate cuts. I think you can lock in some nice yields that are above cash returns at this point, and that's
okay. So here's the quote by New York Fed John Williams. So this is what he said just now. 8:45. The accumulated evidence has increased my confidence that inflation is moving sustainably towards 2%. The current restrictive stance of monetary policy has been effective in restoring balance to the economy and bringing inflation down. Wow. With the economy now in an equipoise, that's a new one, and inflation on a path to 2%, it is now appropriate to dial down the degree of restrictiveness in the stance of policy by reducing the target range for the federal funds rate. Boom. I mean, we're getting the cut at this point. This is the natural step in executing our strategy to achieve our dual mandate goals. Looking ahead, with inflation moving toward the target and the economy in balance, the state of monetary policy can be moved to a more neutral setting over time, depending on the evolution of the data, the outlook, and the risks of achieving our objectives. In terms of the Fed's balance sheet, the committee began to slow the pace of decline for securities holdings in June, meaning they're slowing QT. That process is going smoothly, and as planned, the level of reserves remains well above ample. Yeah, we're getting a cut. We're getting a cut. The cut's happening. I can't believe sometimes I have to debate with people on Twitter that they think the cut's not happening. I'm like, dude, like, I know it's really hard to predict Fed policy, but this is one that I think, like, dare I say, I mean, I'm not going to say it. You guys know what I was going to say. I'm not going to bring the bucket up here because if there's, but I'm ready to put the bucket on the line. Those who know, I'm ready to put the bucket on the line, dude. We are getting that damn cut. The question is going to be 25 or 50. I think this jobs report is probably 25. I think from this jobs report, probably 25. Look at the S&P, dude. S&P is basically about to go green. Robinhood's up almost 1%. Berkshire's down a little bit. Rocket Lab down a little bit. Celsius, a little bit green. Jobs report was not horrible. So let's look at some other pieces of analysis on it. Let's look at what Meet Kevin tweeted just now. Let's see what he said about this. And let's see how he's spinning this, if he's spinning this in a different way. So Kevin says, let's get his perspective right here. Unemployment rate comes in at 4.2 versus 4.3 in the prior month, yet the BLS removed 91,000 people from the labor force. Weaker July report than expected, as well as a negative 25K revision, and we missed the headline today by 23K. The Fed needs to cut. But it's not that bearish. I mean, Kevin's not like super bearish on that. I think even Kevin's acknowledging, hey, we added enough. Like, if this was below 100,000, I would agree that Kevin kind of was right to be bearish, but this was not the level of job growth that you would think is in a recessionary market. Like, it's just not. It's not an amazing market, but it's not like full on crash recession. You know, we're definitely not losing jobs per month, and we're definitely not adding below 100K. It does seem like that hurricane had an effect as well in July, which is why the July report was so bad. So he said the BLS removed 91,000 people from the labor force. Interesting. So labor force participation was 62.8 in August 2023. That's one of those contributors might have been seeing the labor force participation rate from a year ago as well. We're at 62.7. Taking away 91,000 people from the labor force probably helped maintain the denominator on that labor force number, but I don't know if it was enough to necessarily get the street to be that upset about the labor force number. So yeah, it seems like this is what we needed, folks. If you were in the camp that you think the unemployment rate was going to lead to the market either deciding if we go up or down based on pricing in a full-on recession or not, the side that's winning right now is that the market is not pricing in a full-on recession. This is still on path for a soft landing. This is still on path for a soft landing. And that's what John Williams of the Fed is saying right here in this quote. He says, look, we've done what we needed to do with inflation. Now it's time to equal out the balance of monetary policy for employment. And I think even if we get 50, it's not bearish, dude. Getting 50 now just means the Fed's catching up. I know the market might interpret it as bearish, but I don't necessarily think that has to be super, super bearish. Yeah, it's not too bad. It's not too bad. They're reacting to Fed comments right now. Let's see what they say about the Fed right here, and then we'll keep going from there. All right, let's keep going.
Neutral setting. No information there about the speed of this. And he talks about 3 specific risks that he's looking at. First, significant further weakening in the U.S. labor market tops his list. A sharp slowdown in global growth that washes up on these shores. And of course, the volatile up and down process of disinflation. He has himself increased confidence that inflation is moving towards their 2% target. He says the labor market is now roughly in balance and an unlikely source of inflation. The two sides of the dual mandate are moving into better balance. Keeps using that phrase. He's another phrase, actually, equipoise he uses. Williams sees GDP growth of 2.5 in 24, unemployment around 4.25, where it is kind of now, and PCE inflation around 2.5%, Joe.
Very good. Steve Leisman, thanks to our jobs panel, Betsy, Allison, Sarah, and
Joe, one more thing. We're now pretty solidly positive on the 210.
On the 210.
Yeah, we're 3 points positive. I don't know if they have that in the back, but we're cranking up. We have not been here in quite some time on the 210 spread.
And if we haven't had a recession after the inversion, is this when the recession comes, when it
the people do say that? I forgot it was Gabriel Santos on our air who said this is the most dangerous time.
Because that's when it reinverts.
When it
reinverts, that's when it
reinverts.
So this, I do agree. This is a little bit of a dangerous time. Essentially, when we have an inversion of the 2-year 10-year, which means the 10-year is paying you less of a return on a percentage basis than the 2-year, which has been happening for the past 2 years, you're supposed to have a recession. The problem is every metric that is said you're supposed to do this or supposed to do this has not really come to fruition over the past couple of years. And honestly, my thesis on that has been that we printed so much money and we raised rates so quickly. Again, we printed the most amount of money in history. I think it was about $7 trillion in 18 months for the pandemic. And then we raised rates, I think in like 12 months by 550 bips. When you do two things that are that extreme, you create anomalies. And I think those anomalies have led to really weird macroeconomic things happening. GE says, Amit, don't you think that 25 basis points won't really have much of an effect other than appeasing the masses? Yes, but I think 25 basis points will at least tell the market they are correct. Like right now, the market's pricing in 100 bips. And because the market is pricing in 100 bips, if they're pricing in 100 bips right now, then obviously 25 bips needs to get the party started. And so if the party's getting started with 25, I think the market's going to be happy on that. So I think because the 2-year and the 10-year inverted, and that is the sign that we're going to get a recession, and that hasn't happened. It's one of those things where, all right, they now uninverted, but as Gabriela Santos says, if they reinvert, that is also a sign that we could have a recession. But the question is going to be, is that going to play out, right? Is that actually going to play out the way that people think is going to, end up happening? And the reinversion as well, we've seen it many times. We've seen it in 2007. We saw it in 2000 when that reinversion happened. We ended up having a recession. Does that happen again? My only skepticism of that happening again, or that similar sort of macroeconomic policy happening, or similar leading indicator continuing to be a bull case theoretically for a recession, is that things have been so wonky over the past 2 years that I don't know if that's gonna happen again. Like over the past 2 years, if we really haven't had the types of things that were supposed to happen in a lot of different ways, not just on the yield inversion, but so many different indicators that macroeconomists look to, that this is going to happen, this is going to happen, this is going to happen, and this should lead to a recession. If we haven't had that, does it happen again? And I think it's all contingent on the Fed nailing the soft landing, which hopefully it happens. But if that doesn't happen, then I think we're going to be in a little bit of a tough situation. And we saw a chart yesterday around January 2000 and September 2007 when we had that reinversion. That is obviously part of what led to the recession. Now, granted, 2007 and 2000 had massive bubbles, the dot-com bubble or the housing bubble. You see right here, the 10-year at 3.72. It was at 3.5 this morning, so it's up a little bit. It was at 3.5. I don't know if we also have a massive bubble that exists currently, the 2-year 3.6. So there's the uninversion, 2-year giving you less than the 10-year, which is what's supposed to happen. If they reinvert, then that is why Gabriela Santos said that is a time. And what reinvert would mean is that the 2-year gives you 3.7, the 10-year gives you 3.6, which they've kind of reinverted already a couple times over the past week. But we have not had a sustained uninversion of like months of the 10-year giving you more than the 2-year. And then the 10-year ended up flipping in that direction. It was, no, Kris, it was 3.5. It was at 3.5 as soon as the Fed data came out. Maybe you didn't see it, but as soon as the Fed data came out, it was at a new 52-week low at 3.5 this morning. Maybe it was only there for a couple minutes, but it was at 3.5, literally right at 8:30, right when the data came out. What time does the S&P 500 announce the companies that are being added? 5:15. 5:15, so it's going to take some time. Yeah, it was at 3.5, dude. It was either 3.5 or 3.6, but we looked at it this morning. We were like, what? That is absolutely insane that it went down that low. Now, so now it's still at a 52-week low, 3.7. And we're going to see if we get that reinversion. Oh boy, oh boy, oh boy. So that's what we got for the jobs report. Again, if you're joining here, we'll move on from this, but the summary is we have added 142,000 jobs versus 160,000 jobs expected. Unemployment rate came from 4.2 from 4.3 to 4.2. 10-year and 2-year have uninverted. If they reinvert, that is a leading indicator of a recession. But the fact that we printed all this money and raised rates the highest we have in the past couple of years, maybe that balances out the fact that leading indicators historically are not going to be the same type of leading indicators. That's going to happen again. Oh, 3.67 was low. All right, so 3.67 was the low that we saw today. Right now it's at 3.75. And now we're going to see how the market reacts when we open in about 30 minutes for this jobs report. Again, jobs report to me, not bad. 142,000 is not horrible. The market wanted 167 or 160. We got 142. That's why you're seeing S&P basically is green right now. It's down 0.01%. Nvidia's green. Tesla's just a champ right here, up 2% on the day at 234. Palantir is green as well. Robinhood is green. Wow, Robinhood up 1.3%. Robinhood 1994. So Robinhood getting some momentum. So now it is going to be a question on how the market reacts when we open up. And we'll see. 3.657 was low. Okay. So 3.657 was the low in the 10-year. It was the lowest we've seen in a very long time. It was the 52-week low for today. And now markets rebounded a little bit right here at 3.7. 2-year still giving you 3.6, 10-year giving you 3.7. So they have uninverted. My question here, because I think yesterday they reinverted. Again, my question here is, can we close with an uninversion? Because if we close multiple days with an uninversion, then we're getting into that territory of like, all right, are we waiting for the reinversion? And that's going to be a leading indicator for a recession. And then do we, say that metric's not even important anymore if it reinverts and we don't have the recession? Or are we going to stay uninverted for a while and that uninversion kind of just plays out the way it needs to play out? All right, that's what we got in the broader market. Soft landing. I hope it's a soft landing. I think we all hope it's a soft landing at this point. But now we're going to have to see. Let's pull up a couple other analysts and see what they're saying right now as well. Let's listen to Liz Young. She was on yesterday, so she was on before the jobs report, but let's get her take on what she's thinking about the broader market. And then we'll keep going from there.
The beginning of this rate cutting cycle. And since we don't know for sure yet whether or not we've secured a soft landing, I think that continues to be a lot of the consensus view that we are headed toward a soft landing, in which case rate cuts would be stimulative to things like cyclicals, including small caps, including financials, real estate, and some of the other cyclical sectors like industrials. But because we don't have that determination yet, and I think it would be premature to assume that we have secured a soft landing, you still want to be able to have exposure in the portfolio to things that tend to do well during a steepening yield curve environment, a falling dollar environment, and that will protect in times of stress, given all of the news that we're still going to have through the rest of September.
Does that lead you as well to gold and some of the commodities that Goldman Sachs was even calling out this week that we just mentioned a moment ago, talking about added support from the imminent Fed rate cuts could support their long-term, or at least their near-term long, being gold?
I do like gold. I've liked gold for a long time, and I continue to like gold, including the gold miners. So yes, if you have a position there, I would keep holding it. The take that I would have on gold right now is more so about currency volatility around the globe. I don't think that we've completely gotten out of the Japanese yen issue, plus other currency volatility that could happen throughout Asia as that continues to unfold. So the gold trade, I think, is still very alive and well, even though it's been at all-time highs and we've seen a good run in it. I think it's still a good position to have in the portfolio.
Another area of defensiveness that we're seeing in this market is the run up in utilities. And we've got a chart that we can pull up here just to indicate the degree of that upside move. You're looking at the S&P 500 utilities sector index here, and you can see that run up over the course of the last month as the investors kind of seek a little bit more safety. Liz, it makes me wonder about the setup as we head into this key jobs report tomorrow. We're in a different market backdrop this time around than we were last month. Could that change the market's reaction tomorrow if we do get negative data in that jobs report, or is it just going to be a sell-off regardless of the market backdrop heading into that data if it does come in soft?
Well, I think this market is sort of showing restless qualities in the sense that it can't really figure out if good news is good news or bad news is bad news. And we continue to search for direction on all of this macro data. I think if tomorrow's data comes in cool or soft compared to expectations, there will be a negative reaction in the market and likely further selling in a lot of those mega cap names that have led us up to this point. Now, talking about utilities specifically, it's been a little bit more of a mixed bag on what.
So obviously we got a jobs report that did not lead to that massive sell-off that she was talking about could have happened. And there you go, NVIDIA right here at 108.8. We are actually green on the day because the jobs number came in to be not as bad as people thought. Mick B, thank you for becoming a channel member. Really, really appreciate it. Mick B, thank you for becoming a channel member. Vince, what's up? Thank you for being here. Sonny, thank you for the $20 super chat. Watching in Paris. Keep up the grind. Hope you are enjoying your time in Paris, sir. Thank you for being here. And thank you for the super chat. Really appreciate it. All right. So that's what we got in regards to the Fed. And that's what we got for payrolls, folks. 142,000. Not too bad. It's what the market at least wanted. Above 120, 160 was expected. We came in a little bit below 160. 142 was not horrible. And I guess that's why the market is doing okay. That's why Sonny is enjoying all of this in Paris. What time is it in Paris? It's like 5 p.m., right? Time in Paris is 3 p.m. All right, 3 p.m. You get the jobs report while you're probably sipping on a latte in Paris. Intel up 1%, Coinbase up 2.5, Bitcoin at 56.7, S&P at 549, basically going flat right now in the pre-market pound here at 0.13% on the day. All right, so let's talk about some of the stuff that happened yesterday as we get into the market open and get into some of these other companies that reported and see what they ended up saying. Broadcom was the big company yesterday. Broadcom, AVGO, on the day reported. And this is what we had for Broadcom results. It was overall a pretty decent quarter to me. The company is down right now because they didn't have guidance that was as strong as what the street wanted. But it wasn't a horrible report. And I think the street's overreacting a little bit aggressively to it, primarily because NVIDIA is probably down, and that's why market couldn't afford to give Broadcom some momentum. But 47% revenue growth, which is not bad. $13 billion of revenue. Adjusted EBITDA of $8.2 billion. That's about 63% of their revenue. Fourth quarter fiscal 2024 revenue guidance of approximately $14 billion, which would allow them to grow 51% next quarter. So it would go from 34% growth to 47% growth to 51% growth. So you're seeing a lot of reacceleration in terms of that broader growth. And then you've got fourth quarter fiscal year 2024 guidance of 64% on their EBITDA margins. They're planning to do about $50 billion in revenue for the full year. CEO says Broadcom's third quarter results reflects continued strength in our AI semiconductor solutions and VMware. They acquired VMware a while ago. We expect revenue from AI to be $12 billion for the fiscal year of 2024, driven by Ethernet networking and custom accelerators for AI data centers, says Hock Tan. The transformation of VMware continues to progress very well. The integration of VMware is driving adjusted EBITDA margins of 64% of revenue as we exit fiscal year 2024. So you had Broadcom put up some pretty decent results. I think the market was upset because they wanted closer to 55% year-over-year revenue growth. Broadcom doing around 51%. So slight distance there in terms of divergence on how the market conceptualized it. But overall, that is, where the market got upset, but it didn't seem like that was necessarily the worst thing in the world from the market. And so Broadcom right here after hours took a little bit of a hit in the pre-markets right now, still taking a hit, down 6.2%. It was down 9%, so it's not down as much as it was down yesterday after hours, getting a little bit of love from that jobs report. At 142, is this a buy the dip? I'm not fully sure. This company is a $700 billion company trading at a 32 PE. They're definitely growing at a rate that they should be growing at to justify the multiple. It's not like Apple that's growing at 0%, but has a 34 PE. But it is a critical part of the networking infrastructure solutions space, especially when it comes to all the different elements they have with semiconductors in networking IT. The problem is, again, markets wondering, hey, is that guidance really good enough for us to be justifying the multiple that we're giving to them? This is the 10th largest company on the planet. Well, 11th now that Tesla's up 6%. And markets trying to figure out, does that make sense for them to gain some momentum? But right there, Broadcom here is at 152. One sleeper that I think we're not looking at when we're thinking of AI is Oracle. So I was looking at Oracle's earnings yesterday just to get a better glimpse of what they're probably going to pull up in their numbers this quarter. And this is what they said. Let me share this right here. I think a lot of people forget how Oracle reported their numbers. So they said in Q3 and Q4, this is from last quarter, Oracle signed the largest sales contracts in our history, driven by enormous demand for training AI large language models in Oracle Cloud. These record level sales drove RPO up to 44% to $98 billion, remaining performance obligations. Through fiscal year 2025, I expect continued strong AI demand to push Oracle scales and RPO even higher and result in double-digit revenue growth this fiscal year. I also expect that each successive quarter should grow faster than the previous quarter. In Q4 alone, Oracle signed over 30 AI sales contracts totaling more than $12.5 billion. They also said our multi-cloud cooperation with Microsoft expanded significantly in Q4 as we agreed to work together to support OpenAI and ChatGPT, and 11 of the 23 OCI data centers we are building inside Azure went live. It seems like, for those wondering if AI is real or not, Broadcom and Oracle, if you don't want to believe NVIDIA for whatever reason, are not saying that they're not experiencing momentum. I mean, sales growth or RPO growth of 44% for a company that's a $400 billion market cap is just insanity. I mean, you need some massive new S-curve of types of tailwinds to get you to those levels, because you just don't get that type of momentum when you're that big of a company, because the compounding sales effects year over year just become smaller and smaller. That's why their revenue growth is only in the single digits, but their broader RPO growth is now in the mid double digits, which is, not bad at all. So from that perspective, I do think that that's another bullish tailwind for the broader AI sector. Now we're just gonna have to see if Oracle can replicate some of those results. And if they can replicate some of those results, in addition with Broadcom, I think we're going to see a Q4 that has a decent more amount of AI momentum. Tesla keeps rejecting 234.5. Yeah, Tesla right here at 234.112. We needed a good jobs report for Tesla to not get killed. We're seeing Tesla not get killed. In fact, Tesla's actually seeing the rotation out of a lot of this money. Mag 7 right now is all green in the pre-market. Again, we saw this yesterday. It kind of felt like someone knew what the jobs report was going to be. To sell off Berkshire yesterday and to go to the Mag 7 kind of is a bit more bullish before a really big jobs report. So it seems like traders kind of bet NVIDIA right here, even up about 1% right now, that the Mag 7 would not be horrible this morning. One thing we did see yesterday that's a little bit of bearish news, I don't know if it's bearish, but it is what it is Berkshire Hathaway sold another $700 million of Bank of America. Now, I'm not sure exactly what Berkshire's average is on Bank of America, but I think it's closer to like $7-8. I think they've held this thing since 2008, and they bailed Bank of America out in the Great Recession about 15 years ago. So if he's up 8x on the shares from $5 to $40, like, he deserves to take profits. It's just the amount of selling. It's now been close to $7 billion on Bank of America in about a month. So, I mean, it's an aggressive amount of selling. They're still the largest shareholder of Berkshire Hathaway. Their stake is still, I think, like $30-something billion. And Bank of America has done very well. Bank of America is up, I think, 25% year to date. They've increased their share buybacks, increased the dividend, all that good stuff. So I don't think it's necessarily the worst thing in the world that they're selling Bank of America. I think it would be more aggressive if they're selling Apple, but they kind of already sold half of Apple. So I think they're not going to do any more selling of Apple. But Berkshire is going to be sitting. Buffett's going to have $300 billion to play with in the next couple months. And I think the question is going to be, is he expecting some cataclysmic collapse in order to do something with that $300 billion? June says, why is he selling? Yeah, the only argument I can think of is he's securing profits because he thinks of a better opportunity. I mean, there's two ways. The bearish way is he thinks there's a recession and he's taking profits on a stock that he's up on a lot, and he thinks financials will do bad in a recession, which, you know, financials should do good in a rate cutting cycle, but in a recessionary cycle, the rate cuts, I don't know if that balances out the ability for Bank of America, JP Morgan, et cetera, to give out more loans and have more activity, which is what you need as a bank. Or B, he's literally just taking profits and saying, hey, I'm going to go buy up Disney, or I'm going to go buy a PayPal, or I'm going to go buy up Verizon. The other argument, as Thomas says right here in the chat, is he knows that the corporate tax rate under a Democratic administration is going to be raised very soon. And if it's going to be raised, he needs to secure some capital gains at 20% versus 28% or 30% or whatever they tax him at. So one of the arguments could be like, hey, he has a lot of profits and needs to pay less taxes on it before the Democrats potentially win. And if he's afraid of that, then maybe he's locking in some profits before he pays a decent amount of taxes. So I think that's kind of the three scenarios, but nonetheless, he definitely is taking some profits here. Let's get an update from Bank of America, their perspective on what's going on with the Fed, and then we will keep going from there.
Down to the August employment report for insights on how it may impact the markets and the Fed. Let's bring in Savita Subramanian, head of U.S. equity and quantitative strategy at B of A Securities. Some good stuff in your notes. The VIX typically increases 25%. Between July and November in election years. So let me just, how much is it already?
It's already gone up a lot.
It has. So,
and then it's come down a lot. But I think the idea is that you see a lot of volatility from July to November of election years. And this year is true to form. We've seen the VIX hit, kind of a post-COVID high back in July. And, we're back down. But I think the name of the game is don't be a hero.
Billy, don't be a hero.
Don't be a hero. Was that?
It's a song. Billy, don't be a hero. Yeah, long ago.
Are you going to break out into a song?
No, but I saw that in your notes. Don't be a hero. Stick with income stocks, quality stocks.
Income and quality. And I think that we are at a point where the large cap value benchmark looks amazing. I think utilities, real estate, companies that offer inflation protected yield, income for folks that are parked in money market accounts that are about to see a little bit of a drop in their cash returns. So I think that's the idea here, is just to park in safe total return type vehicles where you get paid to wait. And I think there is a lot of election uncertainty ahead. So we've got, kind of a divisive view on fossil fuels versus green. So what do you do with energy at this point? That's a big question mark. You've got, immigration policy. So there are a lot of binary kind of outcomes that I think could roil certain parts of the market.
Still at 25 though, and you say the bar would be really high. So
25 basis points.
25 basis
September,
points.
yeah.
And you do think things are weakening, but the not to the point where anyone's going to panic at this point. So you expect the number today? Nah, it's going to be like around 150, you think, or something?
I think our guys are forecasting 200. They're 200. More optimistic.
Are they?
Yeah,
okay.
And I think that, really, if you saw something weak, you could get a 50 basis point rate cut, and that's certainly on the table. It's being talked about more and more. But I think the idea is we're about to see our first rate cut. This is important.
And we got 142,000 jobs, so a little bit lower than what Bank of America thought, but still enough to warrant that rate cut. Folks, we have money market fund data. I am curious what you guys think. I didn't report on it yesterday because we had Broadcom earnings and I forgot. I looked at it last night and I was like, oh boy, this is very interesting data. So I'm going to put a poll in the chat. Some of you guys might know it already, but some of you guys get your update from me, so you probably don't know yet. Money market funds up or down, increase or decrease is the question. To give some context, we have been increasing for the past 3 weeks, and we have increased over 150 billion to 6.26 trillion on the sidelines for money market funds. So let's see what you guys think, increase or decrease. I'm going to let the poll run for a couple minutes. It's an extreme one. It's definitely extreme one way or the other. And then we'll talk more about it. AJ says money market fund data means nothing if it's held by corporations. Yeah, so we're actually going to look at the data today and go a little bit deeper on this, because yesterday night I actually started studying it a little bit more. How much is held by retail and how much is held by institutions and how much is held by essentially corporations, right? Because the mix between that is actually quite fascinating. I agree. Most, like Google, that has their money in money market funds, they're not going to be putting it back into the market. Although theoretically, they might take some of that money out when rates come down and buy back their own stock. But the divide between retail and institutional still is shocking when you look at the breakdown of it. Okay, we have 187 people voting, increase 64%, 36% decrease. All right, here we go. Money market funds yesterday have officially, for the fourth week in a row, increased by $37 billion. $6.3 trillion. This is the highest we've ever had money market funds. They are here. They are here at this level. 6.3 trillion. If you look at the St. Louis Fed, they actually say it's closer to 6.4 trillion. But the point is, it's at the highest level it has been in a very long time. Now, let's look at the breakup. Okay? So the breakup so it's 6.3 trillion. 3.7 is institutional. 2.5 is retail. 2.5 trillion. So when people say, oh, money market funds can't come back into the market, yeah, like a good percentage of it, 3.7 trillion out of 6.3 can't come back into the markets. But 2.5 trillion is held by retail investors, people like you and I, people that, you can't buy money market funds on like your Robinhood account, but you can contact your brokerage. If you have your wealth being managed by a private money manager, if you have, a couple million, they probably allocate a certain amount into money markets. They can take it out tomorrow if you call them or text them and be like, hey, take it out. I want to put it somewhere else. That's real money that can go back into the markets. So 2.5 trillion in retail investors' hands or not in the equity markets. 2.5 trillion is taking 5.5%, and they're afraid to get into the equity markets, and you can't really blame them. In a world where the market is so volatile and you have all these narratives and you have this jobs report that is determining the fate of humanity, or at least that's what it felt like today, why would you put it into the markets, right? And why would you take a chance on NVIDIA right here versus just get it 5.5%, especially if you have a decent amount of money and all you want to do is protect them. Like if you have 5 million plus or even $1 million, your goal is to protect the money. Your goal is not to, redeploy it into something more risky in a risky environment. So I do think when the Fed lowers rates, some of that money will leave. My question is for the average retail investor, and we talked about this a long time ago. If you're not getting 5.5%, if you're only getting 5% or 4.75, do you really want to take your money out of those money market funds? Do you really want to take your money and put it into a place that's a little bit more risky just because you're getting a better return? I don't know. I mean, like, especially if you have a substantial amount of money that you're actually trying to save, it does get less compelling to put it in money markets or to put it in a high yield savings account when rates come down. But it also begs the question, like, hey, what is the incentive to take some massive risk? Unless it goes down to like 3.5, below 4%, 4.25, then I see that incentive. At 5%, at 4.75, I don't know if the incentive is that dramatic. So we're going to see as that money market fund continues to increase and hopefully flows into the markets. But 6.3 trillion is insane, dude. And again, to give you guys context, we are not supposed to have this much money here. We're not supposed to have this much money here. This is historically, let's just look at 10 years. From 2014 to 2018, 3 trillion was all we had in money markets. Why? Because rates were basically zero. So no one put their money in a money market fund besides big corporations that were just like, trying to put cash somewhere. Everyone had their money somewhere else, really in markets. And as earnings growth continued, markets were able to do well. But as we raised rates and increased money supply, we saw money markets go up. And then in 2023, we raised them dramatically. 2022, now we're at 6.3 trillion. It is a massive amount to be waiting on the sidelines that hopefully starts to make its way into the markets. What if you count for inflation? Yeah, that's a good point. So if inflation's at 3% and the federal funds rate is or you're getting 5.5%, I mean, your real return is not 5.5%. So at this point, you've got to do much more than even 5.5 to beat inflation realistically, which is a good point. And, that's one thing that people have to consider. So as rates come down and maybe inflation comes down, but inflation doesn't go to like 0%, you're still going to have to beat inflation. And the delta between inflation and the nominal real rate you get from the federal funds rate or the money market rate, which is based on the federal funds rate return that you get, that's going to bring into question, ultimately, are you getting a reasonable return? And if you're not, then maybe you say, you know what, I'm putting it into Tesla. or I'm putting it into NVIDIA, or I'm putting it into something that's actually moving, that's actually giving me momentum. Apple right here up a little bit. Microsoft is up. Meta is up 1%. Google's up 0.5%. NVIDIA up 1.2, 108. Not bad. Look at Tesla, 1.78, 234. Friday tends to be a little bit of sell-off for the broader market. We'll see if that happens again today, but this jobs report, not too bad to necessarily think we're going to have a massive sell-off. Look at Bitcoin trying to make his way back to 57,000. Robinhood right here in 1983. Coinbase up 2.6. CleanSpark up 2.4. The miners doing okay. MicroStrategy as well at 2.88%. And then some other stocks. Disney's up a little bit. ARK Innovation is up. You know, it's a little bit of a green day when ARK is up. Netflix is kind of flat on the day. Roku, they got upgraded to $72 yesterday, so that's why Roku's up a little bit. Roblox, $43.71. Marathon up 2.5%. American Airlines up 0.19. Are the banks down? XLF, are the banks down? The banks are flat. And Palantir, wow, Palantir's up 1%. Maybe makes a little S&P pre-market run today as well. 5:15 is going to be the S&P inclusion news for those that are wondering for Palantir. Again, my thoughts on it are, I think it's possible. I was on the phone with Steve last night and he was like, do you really think it's happening? I was like, I don't know, dude. It's going to be tough. He's like, no. You have to think happy thoughts. I was like, what? He's like, you have to think happy thoughts. It's going to happen. I was like, okay, I'm going to think. He was like, go sleep and think happy thoughts about S&P 500. I was like, Steve, I've been thinking about this for like 3 times now, 3 cycles. At this point, it is up to the committee. Like at this point, it's up to the committee to just not be in a horrible situation. Again, I think if you're going to pick SMCI and CrowdStrike, then there is no reason you shouldn't be picking Palantir. I mean, like, I think it's just kind of stupid to not be able to say Palantir is one of the best 500 companies, but that low institutional ownership, that's the part where I hesitate. At the end of the day, that's what the market really cares about the most. Let's get an update from Dan Ives on Apple, get his thoughts on what's going on with Apple, and then we'll keep going from there. Market open in about 8 minutes. Can Palantir cross 35 if it's included? Well, if we get in, I think we go up 10% today. That's exactly what happened to CrowdStrike with GoDaddy. Like when you get in, market buys because they know that everyone else is going to start buying, fund managers are going to start buying, etc. If we don't get in, the debate I'm having with some of my friends is, do we tank 10%? And I don't think so, because I don't think the market's pricing in S&P 500. I think the market's buying Palantir because they think Snowflake and C3 AI are crappy companies. I don't think they're buying it and keeping it at $30 because they think it's about to get included into the S&P 500. Maybe I'll be wrong, but I don't think we tank if we don't get in. If we do get in, though, I do think we go higher. All right, here's Dan Ives on Apple.
And just for Broadcom broadly, right? Last quarter, it said revenue from AI products reached a record of $3.1 billion, making up about a quarter of total sales. Do you expect that to continue to incrementally grow?
Yeah, that's going to ramp up. I mean, that eventually could be about 15 billion. I mean, when you look annually, look, this is actually an under the radar AI play that's starting to form. But as you talked about, it's putting pieces in the puzzle together. I expect strength in terms of what we're seeing, broader AI revolution. Look, this is a second derivative AI play.
Right, that's a great point. So where in the stack does it sit? So in the beginning, I go to NVIDIA for the straight up chips, and then I go to Broadcom for something else?
Yeah, and then now when you actually think about as more where that data is actually going in terms of from an infrastructure perspective, that's why Broadcom plays. I mean, no different than where the hyperscale players play in terms of Microsoft, Google, Amazon, Broadcom. You know, when you look from an infrastructure, they are going to be a major beneficiary. I think Hock has positioned them well to benefit here. And I think investors are still not really appreciating what sort of AI play that they could actually be.
So it gets to the broader question, though, Dan. I mean, I know this is kind of that longer term story. And of course, as we do on this show, and as a lot of investors do, they tend to fret over the shorter term things here. How long do you think it will take before we get a little bit more clarity about the profit potential, the tangible profit potential of some of these AI rollouts?
I think by the end of this year. I actually think, look, we're starting to see use cases explode. When you look at names like Palantir, I'd say on the software side, names like ServiceNow and others, I think—
I love when he mentions Palantir, dude. I love it.
By the end of this year, we're actually going to start to see these use cases, even going into the December timeframe, into January, start to explode. What that means is the second, third, fourth derivative, that's where you're going to see the beneficiary. I continue to focus on, for every dollar spent on NVIDIA chip, based on all of our research, $8 to $10 multiplier for the rest of tech.
Wow.
It speaks to you have $1 trillion of AI capex coming to the rest of tech, and that is not stopping. That's actually just starting, and that continues to be our bull thesis.
I also want to break this down, Dan, because there's, obviously kind of the corporate side of AI, what businesses are using this for, and the more consumer-facing side that most of us are familiar with, the chat GPTs. Apple has a big event planned for next week, largely to introduce some new iPhones that at some point this year will have the software capabilities to run certain types of AI programs. How much of a, tailwind can this be for AI adoption? Because a lot of people are saying that if you get a company like Apple that's able to convince its massive ecosystem of people to at least experiment with AI and then hopefully use it in a more meaningful way, that this could be kind of a more of a focal point, a more of a big pivot in this space.
Yeah, look, I think that's a great, I view it, it's a historical moment, not just for Cupertino, but I think for the AI revolution. This is the consumer AI revolution now going through Apple. Where would AI be right now if Microsoft never actually went down the open AI path? It wouldn't be where it is today. You need the install bases and the stalwarts to go after. And now that consumer piece is going through Apple. And that's why I think next week it starts an AI-driven super cycle.
Mm-hmm.
And you're going to have 25% of the world, when they access AI, it's through an Apple device.
But Dan,
and again, I think this is so important, dude. I'm a little skeptical on how many people are going to upgrade, but I hope that Dan Ives is right on this, because if your mom or your sister or your friend from high school or college starts interacting with LLMs, I know a lot of people in the chat, because we're into tech and investing, we're like exploring these new technologies, but like it's really tough to get people to be introduced to something new unless it's in their phone and it's actually doing useful things for them. So if Dan Ives is right about that, that's going to lead to more compute, more data centers, more cloud infrastructure, more AI workloads, more CapEx spend, because billions of people, or at least hundreds of millions in the first couple years, will be interacting with AI on a daily basis. And then more developers will be building apps to be integrated with Siri and the LLMs and the new set of suite of features that Apple brings out. And that's important. We need that to happen. But if that doesn't happen, we're going to have to see how it ultimately plays out for NVIDIA.
And does that mean that having a diversified AI player is now the way to go versus like a straight up pure play like an NVIDIA? Because in some arguments, that's why Broadcom has lagged, because it is diversified.
Yeah, and that's really been our call to investors, is that you still own the godfather of AI, Jensen and NVIDIA, along with Microsoft. But now you look at the second, third, fourth derivatives. That's where Palantir plays, ServiceNow, Oracle. You look at Broadcom plays. I'd argue AMD, Lisa Su, in terms of how they're going to play. Even some of the cyber security players, that speaks to the revolution playing out. It's not just about NVIDIA.
Right.
Now we start to see that incremental spend. That's why we're bullish.
Well, and then that's also where the Apple story too, right? Because that's your thesis, even though they're diversified and even though there's going to be the China drag, the things that we all know.
Look, and for Apple, it comes down to it's about monetization. We think it adds $30 to $40 per share in terms of the AI story. The way that you get to a $4 trillion market cap, it's with AI. Were they first? No. But you're talking about an install base that's unmatched, and betting against Cupertino and Cook into an AI-driven super cycle, and that's a bad bet. Again, it's like going up against Taylor Fritz in U.S. Open.
Okay, I love the reference there, Dan. Way to stay relevant. I do want to just make a quick pivot here and ask you about kind of the role of Tesla. I mean, there's been a lot of talk, of course, about not just the issues it's having as a company, but also the broad.
Okay, we'll finish his thoughts on Tesla because we got the market open. We'll go back to that. It's like 30 seconds left. I'm sure Dan is going to say, well, we think they're the most undervalued AI play. 30 seconds, folks. Let's see what we get in the market open. This is going to be our first market open after a very consequential jobs report. The market has had time to digest it for about an hour, and now we have to see how they've ultimately, or how they come to the conclusion on what they want to do in this market based on 142,000 jobs versus 160,000 that was expected. 9:30 Friday, September 6th. Thank you everybody for being here. The stock market is now open. Wake your ass up. Here we go. Palantir, $30.60, up 1.49% on the day. Tesla Got a bit of a red candle right there, still up 1%. The green candle starting to form, up 1.34, 233.55. Seeing a ton of money start to rotate and leave other names and likely going to Tesla. Wow, S&P opens green. There you go. S&P 500 opens green at 550. Look at the green candle. You got some strength. You got some girth on that candle. 550.44 going green. Bitcoin, 56,800. Coinbase up 2%. Intel down a little bit. NVIDIA got a red candle from the pre-markets, but it is green, 107.98 on the day. Dell is red a little bit. Palantir, wow. This is the S&P run-up. This is the pre-market run-up for the S&P. This is the I think if we hit 31.50, that's a pre-S&P inclusion run-up that we're seeing right here. $30.84. We'll see if we can get there. Tesla 231. All right, now Tesla's got a red candle. Still green, but not able to break that 230 level. Path is up 8%. They had a good earnings yesterday. They were down about 50% year to date, so it makes sense that they get some momentum. Rocket Lab up about 1%. Celsius up 1%. They were also down 15% in the past week, so getting a little bit of love. Verizon, they're buying a company for $20 billion. Frontier Communications, market has them up 1%, even though they were down for the past couple of days. SoFi, 737. This jobs report should have SoFi a little higher, in my opinion, getting closer back to that $8 range that they were at a week ago. 1.65% up on the day. We're definitely getting a rate cut. That is very bullish for SoFi. MicroStrategy is up 3%. TSLL just went red. That means Tesla just went red. So there you go. Tesla struggling. If you got too many sellers at that 231 level, and that's what's hurting Tesla right there. Where's Palantir? Wow, Palantir. Okay, let me see the $31 resistance and see what we've got for Palantir. So Palantir, to get to $31, there's no resistance. There's like a couple hundred shares. Yeah, it just needs volume. Volume is a little light. It's not as strong as it could be, but there's not a massive wall at 31. There's like 1,000 shares. So if you get a little bit more on the buy side, we should, I think, and the macro holds up, we should be able to get there. Right now, it's probably algos controlling it a little bit. So if Palantir hits 32 and then we don't get accepted, I think, yeah, there you go. 30.95 is trying to get to 31. I think then there's a chance we could fall. I don't think S&P inclusion is baked into the price. So if we're stuck at $30, I don't think we collapse to $24 if we don't get into the S&P 500. But if we pump to 32 today before 4 p.m., I think then we could fall back to 30, because if the only reason we went from 30 to 32 was because of the S&P inclusion, right here, there you go, we touched 31, and then it doesn't happen, then yeah, the market would probably sell that off. But, for the people thinking, oh, it's going to go to 25, 26 because we don't get into the S&P, I don't think that's, I think the market is buying Palantir for other reasons than S&P. So we'll see how that ends up playing out. Basically at $31, I do think this is a little bit of a pump. I mean, it's outperforming a lot of stocks right here at up 3%, outperforming Tesla, NVIDIA, the S&P. I do think some people are getting excited for this S&P inclusion. They're buying it up. Maybe Algo's buying it up as well. And today we're going to see what the impact of that is. NVIDIA right here at 107, Coinbase at 162, S&P, wow, up a 0.25% right here at 550. So that jobs report that, people thought would be really bad ended up being really okay, not really good, not really bad. And the market doesn't care. The market's moving forward. Robinhood's over 20. Didn't even see that. There you go. Look at that. Nice little pump on $20, 2% on Robinhood as well. I think that makes sense. And I think that's less because of Bitcoin, because Bitcoin is barely up. Even yesterday when Robinhood pumped after hours or at 2 p.m., it wasn't because of Bitcoin, because Bitcoin was falling. It was because of that new event, that Awaken the Legend event. I think the market's getting excited about that, as they should be. I think it's going to be a good event for them. Amit, what are your favorite stock picks going into rate cuts? It's an interesting question. I haven't thought about it too much. Palantir and Robinhood, I think, will do well during rate cuts. The only problem with Palantir is that they're up so much this year. So over the next 3 or 4 rate cuts, I think it's irrelevant for them because they don't even have any debt. It's more so about their Q3 earnings. If they can put up 30% growth, I think 35 by the end of the year is very possible, even though that would be a hefty premium. But again, they're one of the only names in AI and SaaS that's putting up that growth. Robinhood, I think, is going to benefit because if this was 0% interest rates, Robinhood would be like a $50 stock right now. You can't be growing 40% year over year at a $17 billion market cap with $5 billion in cash, valued at 17 billion. Like the enterprise value at 12 billion, growing 40%, and you're profitable. It's stupid. It becomes ridiculous, right? But rates are high at 5%. So I think as rates come down, the prospects of companies that are actually growing, like NVIDIA. I mean, I know NVIDIA doesn't need a rate cut, but NVIDIA is growing, dude. And when it's growing like this, if your money market funds and your high yield savings account are not giving you as much of a return, you look to assets that are growing. And if you look to assets that are growing, I would imagine companies that are putting up those results should do well. The mortgage lenders theoretically should do well as rates come down. Banks, I think, like Bank of America, JP Morgan, I think they should do well, especially regional banks that are still getting hit because they have so many losses on their loan books that as those rates come down, the paper losses become less paper losses. If you're down 100 billion and you lower rates, maybe you're only down 94 billion. That 5 billion goes down to your tangible book value. So theoretically, that should increase the asset value of these banks, and they should do well. And they can do more loans, right, as rates come down at more attractive prices. NVIDIA right here is green at 107. So I think the banks will do well. I think high growth tech stocks should do well. A company like Enphase, I don't know if solar is going to catch a massive bid if we lower rates, but it's going to be easier to convince people to finance their house if you have lower rates with solar. Robinhood right here at 2020. So I think companies like that should do well. Tesla, I think, should do well as well when you get a rate cut. Tesla right here down on the day at 228. Can't really break that 230 level, but Tesla should have a tailwind as people potentially think of maybe buying a Tesla as rates come down. NVIDIA and Tesla are red. Interesting. So markets sold off. Well, NVIDIA is still slightly green. Let's look at the Mag 7. We've got Google green, Amazon green, NVIDIA green, Google, Amazon red, Tesla red, and Microsoft, Meta, and Apple are green. Apple's up 1%. That September 10th event next Tuesday is going to be a big event for them. Google has been in no man's territory. Google trading at a 20 PE, I think, is crazy, but I also understand why it's trading this low. And then Tesla just getting hit. Tesla's still up nicely for the week. I mean, it's had a good week. It was at 188 on August 8th. Now it's at 227. So if you bought the under 200 dip, you've done well. But unfortunately, Tesla not being able to crack these levels. Yes, TJ, we're doing our segment today. We are doing our segment. So TJ, you can join at like 10:05. Let me send it to you. Or 10:30 based on you. So TJ, I know you're in Vegas. Just let me know what time you can join. But I just sent you the link. TJ will be on, guys, in probably 30 minutes. And we will do our option segment. TJ, if you're too hungover in Vegas, let me know. We don't have to do it today because I know you might have had some fun last night. But or actually, maybe it would be fun to see TJ drunk talking about his options. Maybe that would be more fun. So yeah, TJ, just let me know. Meta right here at 519, NVIDIA at 106, Tesla at 225. This is why I couldn't live on the West Coast, because the market open would be 6:30 for me. Like, that's ridiculous, dude. 6:30 on the West Coast. That's like for the market open. Like I can't imagine. Then I would have to wake up at 4:30 to get ready. Like, dude, that's just like. And then the market closes at 1 p.m. That's lunch. That's not when the market should close. The market should close at 4 p.m. That's normal. I can't even imagine for people in Europe that are tracking the U.S. markets. It's like freaking 6 a.m. or 7 p.m. when the market opens or closes. It's like, it's too much, dude. That's why I need to be in New York forever, bro. Central time is goated. I like Eastern Standard Time. I've always loved Eastern Standard Time, but you get done at 1:30. That's true. You do get done at 1:30 and you have the rest of the day. It just feels kind of weird, dude. I remember when I was in California a couple months ago and I was tracking the market, it just felt weird, dude. It was like there was breaking news at 2 p.m. I was like, what is going on? But actually it's 5 p.m. It's after hours. And it's like, it just feels off. Robinhood right here. Okay, Robinhood got a red candle. It was at 2020. Now it's at 2003. So still at $20, holding that level. Bitcoin falling just a little bit. Where are the Qs? NASDAQ is down 0.5%. All right, so you're seeing some downside momentum. Now the market's starting to fall. Palantir was just at 31. Now it's at 30.30. We're getting a little bit of a 940 sell-off right here. NVIDIA down 1%. Bitcoin down. Dell is down. Berkshire Hathaway is up. Wow. Value's up. Value was down yesterday for tech. Now value is up. Of course. Why wouldn't it be? Okay, couple of headlines. Qualcomm is exploring the possibility of acquiring portions of Intel's design business. That came out from Reuters 11 minutes ago. Last night, there was an argument that Intel is thinking of selling Mobileye or part of Mobileye. So that may be part of the restructuring that the suits think is important for them to engage in. Oh, Costco. We got to talk about Costco. Dude, Costco had the results come out last night, their monthly results, and they crushed it again. I know they're trading at a little bit of an expensive valuation, but again, Costco proves that they're doing their momentum. Have you guys seen the videos of the dad and the son at Costco with the chocolate cookie and the chicken bake? I know some of you guys have seen those videos. Yeah, you've seen those videos. Dude, those videos are hilarious. I don't know if they're paid by Costco or something, but They're absolutely hilarious. So Costco right here, 19.8 billion in the month of August, up 7.1% from last year. 78.2 billion in the 16-week fourth quarter, up 1% from 77.4 billion last time. And they opened 6 new warehouses, 3 in the US, 2 in Japan, 1 in the UK. So Costco's been expanding really well. 7% growth off of a $19 billion base is not easy. Costco stock right now is at 882. It was at 915 a week ago before NVIDIA earnings, and then NVIDIA kind of brought everything back to life. 918 was the top, 391 billion market cap. PE is still 54. I still think that's a little intense to be paying for Costco, in my opinion, especially because the growth is, not even 10%. But I understand why people, want exposure to Costco. And, the other argument is it might be a defensive. If we have a recession, people are not going to stop going to Costco. In fact, wholesale might get more attractive in Costco because that's going to be the best bang for your buck. So that is, I guess, the bull case for Costco, but still put up some good numbers. And those numbers don't seem that recessionary to me. Up 7% is not too bad. Is Tesla down? Tesla's taking a crap. Yeah, Tesla's down 2%. Tesla not getting any love. You would think they end out the week right, and they are not ending out the week, at least for now, in the right spot. All of tech just took a dip. Palantir just fell to 30. Look at that red candle. It's almost like it's algorithmically controlled to see all these stocks fall at the same time. NVIDIA getting destroyed right here, dude. 105. Are you kidding me? Down 2%. Tesla down 2%. Palantir down 2%. Wow, so interesting. All of them down 2%. S&P takes a dip, down 0.07. HIMS down 2%. Berkshire's up. Interesting. Market rotated out of value. United Healthcare, Coca-Cola, Berkshire Hathaway yesterday into big cap tech. Jobs report comes out. Decent report. Not horrible, not amazing. Market leaves big cap tech, goes back into value, sells off growth. It is very interesting to analyze the equity markets. It's always interesting. September is going to be September. That is correct. September is going to be September. SoFi's green. All right, so at least SoFi's green, 732. Kava is up a little bit. Airbnb is up. Carnival Cruise is up 1.2%. Zscaler at 162.73. If you are just joining, the jobs report came in at 142,000 versus 160,000 expected, which was not as horrible as the market wanted, but it's also not as great as the market wanted. Unemployment rate 4.3% went down to 4.2%. The 2-year and the 10-year Treasury yields have inverted 2 years ago. They have uninverted over the past couple of days. However, that's not the best thing in the world because the uninversion usually tends to signal a recession is coming up. Why? Because many recessions have occurred after the yield curve has uninverted historically. And that's really because the inversion signals the markets and investors expect slower growth or a downturn, which often reflects central bank intervention, obviously interest rate cuts aimed at preventing or mitigating some type of, massive economic slowdown. So the uninversion is not super bullish, but it's one of those questions around, hey, can the market, aka can J-Pow, who is the market, have an uninversion with a federal funds rate that's coming down that doesn't lead to a catastrophic recession? History is against him. So if you're bullish right now, the odds are against you. But again, the reason I'm bullish and the reason I think a lot of some of these other people still choose to be bullish, like Tom Lee, Dan Ives, etc., is because even if the yield curves are uninverting, even if unemployment is not exactly where you want it to be, even if CPI is still a little elevated, tech growth still wins. And I know Tesla's down right here, 2%, but Tesla's innovating, NVIDIA's innovating, Palantir's innovating, AI is a real thematic. Broadcom put up $12 billion of AI revenue yesterday. Like, at the end of the day, money is still being made in tech, and that might be enough to supersede the historical economic recession indicators like a yield curve inverting and then uninverting, which historically signals a recession. So we're going to see. We're going to see if tech can bring us home. We're going to see if the macro can hold up. But as of now, the jobs report this morning was not as bad as what people thought it would be. And, markets reacting to that from that perspective. Captain says, I'm bearish, but I think Jay Powell is doing a good job of a soft landing. I agree, dude. I mean, he got inflation to come down, which is what we needed to happen. S&P right at 500 right here at 550. But maybe he waited a little too long. And so the question, and he probably did wait too long. I mean, that's objective. We can say he waited too long. The question is, will those rate cuts be enough to stop the inevitable quote unquote recession that you get from the uninversion of the yield curve, because tech growth is good enough and because the labor market is not going to decline that dramatically? I think 50 bips would not be bearish, dude. I know the market might interpret it as bearish. I think it would be super bullish. I think J Powell would be like, all right, let's just like get this over with. Let's start cutting. But 25 bips, it seems like it's more than guaranteed at this point. Verizon's up 1%, MicroStrategy up 2%, Coca-Cola's up a little bit, Visa's up, American Express is up. Yep. All the value plays are up on the day. Oh, Broadcom. We didn't even look at that. They had earnings yesterday. We looked at that in the pre-market. Wow. Down 9%. Holy crap. This one took a hit. This one took a nasty hit, dude. Goodness gracious. 9.3%. Again, they put up $13 billion in revenue. They raised guidance, growing 47%. Not sure how much more the street wanted from them, but it looks like it was just not enough. It reminds me of Micron. Micron was at 150, collapsed all the way to 88. I don't think that's going to happen exactly here. But they said, hey, we're sold out for 2025. And the street was like, great. We're selling off your stock 40%. And I was like, what, dude? They said they're booked out for 2025. The street was like, we don't care. We're fine. So Broadcom, kind of the same reaction the street's having right now as well. June says she's buying Broadcom. I don't hate that. I don't hate buying it at 139. Is this the low for the year? Year to date? No, it was at 104 in January. Last time it was at 138 was August 5th. And the last time before August 5th was June 4th. So we've touched 138 3 times this year. We were below 138 for the majority of the year for the first 5 months. That's when it was running up. Then it catapulted to 185 in June. And then it made its way back down. The average has been for the past 2 months around 150-ish. So you are getting a decent discount here at 139. But the question is, how big of a discount could it turn into in the coming months if it goes down? Look at the max chart of Broadcom. Yeah, I mean, this chart is beautiful. It looks amazing. It looks just like Nvidia's chart, right? If you bought it in 2010 and you've been patient, you've done very well. But now is the question of, if you're buying it at 138, do you still get some type of maybe not similar return, but a return that's decent like this? This does look like Nvidia's chart though. I mean, it ramped up pretty much at the same time Nvidia ramped up, and we see this in terms of how the stock has played out. Also, they did a 10-for-1 split a while ago. So, the stocks that have done 10-for-1 splits have not done that well. Chewy is up 5% of the day. MicroStrategy 10-for-1 split, Nvidia 10-for-1 split, and Broadcom 10-for-1 split. All of them are down from the price that they split at the 10-for-1 split range. I think MicroStrategy was at 140, Nvidia was at 125, and then Broadcom was at 165-ish or 170 when they split. So the 10-for-1 split has not been that exciting, at least not this year. SMCI is going 10-for-1 in October. Well, that's another example. SMCI, I think it's under 400. Oh my God, it's under 400. 398 down another 4%. This one has just been, it's going to be $40 or $39. The 10-for-1 split has not been healthy this year. I mean, it's been like a trend at this point that a 10-for-1 split has been bad. Again, probably opened up the options market a lot more for these stocks, but has not necessarily led to more share price appreciation. Waiting for Costco to do the next 10-for-1 split. So I think Costco should do a split. I think Meta needs to do a split. I think they should do 5-for-1 and get that sucker down to 100. I think Eli Lilly needs to do a split. More people, I think, would be interested in Eli Lilly. Look at the volume on Lilly. 350,000. That's nothing, dude. Like 350,000 shares. And that's probably because the stock is $1,000 and it's hard to trade it. So I think Eli Lilly, we need to do a split. I think Costco, we need to do a split. And I think Meta definitely should do a split. Also, there's another name out there. Another name I saw. Yeah, it's like $800. I'm forgetting the name. It's a SaaS name. I think they need to do a split as well because they're at $800. You would imagine they can get some more interest if they get that a little bit lower. AMD's down 1.4% as well. CrowdStrike, Palo Alto's up a little bit. Zscaler's up a little bit. CrowdStrike is red by about 1%, 254. CrowdStrike has a big event coming up on the 18th or 16th. They're going to announce more guidance for fiscal year 2026. So investors will get a better read of the outage and what happened there. Celsius up 3%. So Celsius a little bit of a rebound after a rough. Oh, Netflix. Yeah, Netflix should definitely do a split. ASML, that was the company I was thinking of. So it wasn't semis. It was SaaS. Yeah, ASML. They're almost at 1,000 as well. They should do a split. Celsius was down 12% this week, primarily because their margins are getting hit from the Pepsi deal, ordering $120 million less worth of inventory, which is bad news. But I think the bad news now is baked in. So does this thing really deserve to be in the 20s? I don't think so. I mean, it's taken a collapse, as you can see right here, from 99 to 33. Kind of feels like a little overdone, but it is a correction I think that was needed. I think $100 was kind of ridiculous for some. I mean, it was valued almost as much as Monster, and people are not drinking Celsius as much as Monster. So I don't know if this is the bottom, but it does feel like a decent amount of sell side. If you wanted to get out of the stock, I think you're out of the stock. I don't know how many more people are getting out of it at 32. But it's up a little bit today on the rebound. MicroStrategy up 1.4. Rocket Lab up 1%. SoFi up 1%. Where's Tesla? Yeah, Tesla's down 3%, dude. Tesla's getting hit. Tesla is getting hit. Trump did announce yesterday that he would, Mercado Libre. That's another one. Mercado Libre should do a split, 100%. Mercado Libre is only like less than $100 billion market cap, I think. So their stock price is just up a lot. MELI, 102 billion. Yeah, right above 100 billion. Trump announced yesterday that he would appoint Elon as a commissioner in a new agency for cleaning up government agencies that have been not spending as wisely. Essentially, they would audit a bunch of government agencies like the IRS, the Department of Education, Department of Energy, etc. And theoretically, they would be, quote unquote, draining the swamp. Trump announced that yesterday. He said if Elon is not too busy, as a joke, he would be doing it. Elon then tweeted at him. He was like, yep, I'm ready to go if you guys need me. So that is going to be really interesting, dude. Could you imagine Elon and Trump like firing a ton of government workers that are that in their perspective are not doing the right job? Like that would be crazy, dude. I can't even imagine that happening because I don't think the bureaucracy of the government would allow that to happen. But if he does what he did at Twitter, which is just clean up 80% of the workforce, that would be pretty interesting. Now, the reason I bring this up is because, again, I think this does have implications on Tesla. At the end of the day, if Elon takes that role, Tesla shareholders are going to have to ask themselves, what does that mean for Tesla? What does that mean with Trump's relationship with Elon? What does that mean for Elon's time commitments? And ultimately, what does that mean for advancing FSD from a regulatory perspective? I think that's, I think the hidden reason he wants Trump to win, to be honest, is he just wants someone in the White House who's going to listen to him when it comes down to making FSD and the regulatory approvals for FSD happen. Like, he wants to be able to call up Trump and be like, hey, can we just get FSD approved? Because right now, I think if he tried to get it approved nationwide, it would be really hard. But if he appoints the people that he wants to appoint to get it approved, maybe there's a better chance there. Which is kind of smart. I mean, at the end of the day, if that's the game plan, I don't know if that's the game plan, but that's the real reason I think he wants him to win. Because, I mean, even think about it from an international perspective. If he says, hey, Trump, can you call Germany? Because Germany is giving me too much of a hassle when it comes to the FSD approval. And then Trump is cool with some buddies in Germany, and then Germany gets it done, and now Tesla has full FSD authority in Germany. Like, maybe that's his argument for wanting Trump to be in office, because then he can just have some phone calls be made to get things done. No one should have that public relationship with the president. Yeah, I mean, look, there's a lot of people that think, hey, maybe that shouldn't be the case. Maybe that's too intense. Maybe that's too close. So I understand that perspective, but I think that's kind of what Elon's thinking about from this angle. Let's finish up that Dan Ives flip on what he has to say about Tesla, and then we'll keep going from there.
Broader EV space, but also there was this idea that Tesla as a company was much bigger than just about EVs. It was about energy. It was about AI, if you will, and automation as well. Where do they fit into this ecosystem?
I think Tesla is the most undervalued AI play in the market. Now, next month, Robotaxi Day, that's going to start the next phase of the Tesla growth story. Now, Kris, look, they're in between two growth waves. They've had headwinds from a demand perspective, but the Tesla story, it's about autonomous FSD. That's the golden goose. That's what they're going after. And I continue to view them more as a disruptive robotics AI play rather than just a traditional automotive company. I think that will be a huge sort of moment for Musk and Tesla, October 10th.
Yeah, pretty much what we thought he was going to say, the most undervalued AI play. I kind of felt he was going to say that. Well, that's what he said. Tesla right here, down 2.5%. The main headlines this week for Tesla, remember, the reason it ran up is because of two things. A, China registrations were up year over year by like 15 or 20%, which was awesome for their Chinese, for just more sales in China, more deliveries in China. B, was Tesla AI came out with a roadmap kind of, and that roadmap was essentially saying, hey, we are getting ready to launch aggressively. And that is, I think, what got the street excited as well. This was the roadmap for those that missed it yesterday. Due to popular demand, Tesla AI team released roadmap, and they have a bunch of things that they're doing in September, bunch of things in October, and then Q1 2025, FSD in Europe, FSD in China, pending regulatory approval. This is also why Elon, wants to keep a good relationship with the rest of the world, because at the end of the day, Tesla is going to get approved in other parts of the world, which is much more strict than the United States when it comes to this type of stuff. He's going to need friends in other places. So I don't know if he's as friendly with Europe right now. He is friendly with the Italian prime minister. Have you guys seen him meet the Italian prime minister? She loves him. She was smiling. She was happy. She was hugging him, all this stuff. And then you got other, people in the UK and parts of Europe that don't really like him. But this is the roadmap. I think this is what got the street excited, because they're like, all right, we're finally getting some updates on what Tesla's going to be able to do. We think Tesla's going to have some more momentum. And now the question is simply going to be, can Tesla continue to prove their dominance? And if they do that, we'll see what happens with Tesla. What else do we have? Tesla right here, 225. All right, market's going red. Meta's down. SMCI down 4%. Costco down 0.5%. QQQ down 1%. Robinhood still holding up 1973. Palantir $30.28. Tesla still down 2%. CrowdStrike down 1%. So broader market's taking a bit of a hit. S&P 548. All right, so the S&P is down worse than it was in the pre-markets right now. It was at 551. Now it's down. We'll see if it continues to go. Is Neo down or Neo's up? Neo's green. Wow, Neo's up 5%. They had a good earnings yesterday. It was not a bad earnings. It was a decent earnings. 2 billion shares outstanding, so it does take a little bit of volume, which they got 30 million shares already today to get that stock moving higher, but not a bad earnings from Neo. What did you think of the jobs report? I thought the jobs report was not bad. I thought it was not good. So 142,000 for those that are just joining. The jobs report was decent. Could it have been more? Yeah, but it wasn't 40,000 or 50,000 or 60,000. I mean, some of the bears thought we were going to add 10,000 jobs. Like literally, there were bears that were like, "Oh, we're barely going to add any jobs." It's like, okay. I mean, that's not the case. Now, I get the argument about the revision, and I get the argument you can't trust it. I understand, but we can only do what we can do with the numbers. And if you don't trust any of the numbers, then you got to get out of the market. That's my perspective. If you don't trust any of the numbers, then you should just be in cash, because then it's like you just don't trust anything in the economy. If you're going to be in the economy, you have to trust the numbers to an extent, even if you're skeptical of them. So I think 140 is decent. Private payrolls at 99, or I think at 124. Government at around 40,000 jobs. 25,000 jobs, which is where we got to that 142,000 number. It was enough for the market to not collapse, but it was not enough for the market to moon. So I think the rate cut is now guaranteed. I don't think it's going to be 50. I think it's going to be 25. We trust the numbers will be revised. That's a good one. So I think it was a good report. It wasn't horrible. Wasn't amazing. It was decent. The excitement I had for the report over the past couple of weeks kind of died out, though, because like I kind of felt it was going to be flat. And so it wasn't like one of those, like my heart wasn't palpitating before the numbers. I was like, well, I think the numbers are going to be okay. And the numbers ended up being, okay. So that's my perspective on the numbers. Unemployment did go down to 4.2, which is good. Now, a lot of that is because government added jobs. So again, you got to take that with a grain of salt, but unemployment is down, which is not the worst thing in the world. Thomas says, I get a kick out of people that are like, these numbers are going to suck. Then immediately after seeing decent numbers, these numbers are rigged. Yeah, exactly. It's like, also, that's the conundrum. If you think the numbers are rigged, then whether it's good or bad, don't you believe the numbers are fake? Like that's my point about getting out of the market. If you believe all the numbers are fake and you vehemently can't trust the numbers, then you can't trust them if they're good or bad, because the numbers are fake. There is no good or bad. It's just like wrong always, whether it's good or whether it's bad, because of the constant revisions. So you got to believe in it to an extent. I just hope the revisions start getting, lower and lower. Lululemon, couple of pieces of news last night. Lululemon CEO bought 4,000 shares at $260 per share. This was surprising, dude. I did not expect the Lulu CEO to buy up some shares right here. Spent $1.04 million. So I guess he thinks that $260 going into a pseudo recession, maybe. He thinks Lululemon, which is a product people buy, in my opinion, as a luxury, right? You're paying a decent amount of money for these sweaters and sweatpants and all this stuff. I guess he thinks they're undervalued at $260. The stock is down 56% year to date. So if there was any time you would buy, it would be now. if you're the CEO, but a nice vote of confidence. I mean, you don't really get that from a CEO of a company like this that often. So that was nice to see. S&P 500 now down 0.3. Wow, S&P is actually taking a little hit. 547. Tesla's down 3%. CrowdStrike's down 2%. SMCI down 5.5. SMCI got downgraded today by JP Morgan. They got downgraded to, I think, $500 on the price target, but they got to neutral. The price target was 950, so they did get a pretty aggressive downgrade, even though SMCI is below their price target currently, but 950 to $500 right now. Oh, we do have a note from Adam Jonas. Let's read this real quick. Adam Jonas from Morgan Stanley. He just put out a note on Tesla. And then in about 5 minutes, we'll have TJ join and we will do our option segment for today. So Adam Jonas said, Tesla recently announced that full self-driving feature will be launched in China in first quarter 2025, pending regulatory approval, slightly later than the originally expected late 2024 launch. We can't rule out the upcoming U.S. election and rising geopolitical tension as potentially critical factors in the rollout of FSD in China. Local brands should be bracing for Tesla. A 1 quarter delay won't cause local brands to let down their guard. Some still feel uneasy with how disruptive Tesla's end-to-end neural network could be. Local OEMs are expected to expedite the progress in developing and launching L2 plus urban functions in the next 6 to 9 months. We don't think FSD rollout equals a green light for robotaxis in Tesla or in China, which would have had more data sensitivity. While bullish on long-term potential, near-term expectations should be managed. And then on autopilot, the launch of FSD in China could actually be a blessing for the whole smart EV ecosystem, motivating consumers to attach greater importance to autopilot functions. Interesting. So basically, Adam Jonas saying, hey, although robotaxi is delayed or FSD is delayed in China, I didn't even know it was delayed. I didn't know it was going to come out in late 2024. Apparently, that new update was delaying it by a quarter. Adam Jonas says that's not that big of a deal and that the local brands will be on guard, but it shouldn't necessarily hurt Tesla's prospects in China either, which is fair. I mean, I don't think anyone expected it to happen at the end of 2024. I didn't even know that was on the roadmap, but the fact that it's delayed by a quarter, is not the worst idea. You said, look at the new Robinhood tweet. Yeah, Robinhood says they have an announcement coming on 10/16/2024. This is the website for those that haven't seen it. It's a pretty exciting website they put up yesterday. It's called The Legend Awakens. Join us for the next chapter of Robinhood as co-founder and CEO Vlad Tenev introduces the world to our legendary new trading products. To say the word legend is a pretty bold statement, dude. Legendary is a big deal. So if they're claiming these products are legendary, I would imagine that it's some pretty dope stuff they're putting out. And hopefully the street is excited about that as well. Barclays upgraded Hood. Did they upgrade Hood today? Let me know the price target if you have that. I didn't see that today. Where is NVIDIA? Is NVIDIA going down? Is NVIDIA getting hit? Wow, NVIDIA is getting hit. NVIDIA down 3%. Holy crap. NVIDIA getting demolished right now. Whole market went red, but NVIDIA is taking the brunt of the pain right now. That is aggressive. I'm beneficial. You posted it. All right, let me check your Twitter. I don't know what's going on with NVIDIA other than the typical Friday sell-off. I don't see any news. Barclays upgraded it to $20 from $18. Okay, cool. That's fine. Barclays and Citibank, I don't think they understand Robinhood that well. I trust Bank of America, Wolf Research, the other guys. They're so concerned about the crypto contingencies, and I'm like, dude, like crypto's not a big part of their business, but they've always been a little bit more worried about that. But it's good. At least they got a little bit of an upgrade today, which is not bad. Okay, so NVIDIA right here down 3%. Don't know what the reason for this is. The DOJ subpoena apparently was fake. Dell is down 3%. Let's look at the semis. But all the semis, oh my God, yeah, all the semis is a bloodbath. SMCI down 4, AMD down 2, NVIDIA down 3, Intel down 2, ASML down 2, Broadcom down 10. That's ugly. TSM down 2, Qualcomm down 1, Dell down 2, Micron down 2. First week of September is going to end in a bloody, bloody, bloody week for the semiconductor names, unfortunately. But it is what it is. It seems like they took the brunt of the pain. The Max 7 really didn't take that much pain. Tesla's going to still end green for the week. Meta, Apple, they're going to be green. Crypto names are basically flat. Bitcoin was, whatever this week. Value got a bid, Berkshire, Verizon, Coca-Cola, but the semis just got demolished. This week, they got hit pretty bad. And so I guess we'll see how it plays out. It does feel like a regular Friday sell-off, but the semis in general are getting a little bit more hit than normal. All right, folks, let's do our option segment that we do every week. For those that are new to the channel, I have a public portfolio of about $1 million. Not my money. It is my good friend TJ the Wheel Deals Money, but he is allowing me to do this segment on the channel where we both work together to generate some premiums through wheeling options, selling puts and selling covered calls to make some money. And over the past 6 months, we've made about 250 grand off of that 1 million in collateral, which has not been too bad. So let's bring him on stage and let's get into our segment all the way from Viva Las Vegas. TJ the Wheel Deal.
What's going on, Amit?
Why are you in Vegas?
My buddy Roland is celebrating his 56th birthday. It's actually not till the 12th, but we wanted to be over here because it's opening weekend for the National Football League.
Wow, interesting. Okay,
so I wanted to gamble.
You want to gamble. So before we get started, I just want you to tell everybody, you have a Vegas past in your life, right?
Yes.
You were like professional in Vegas for a while, and then you moved on from that. But you know this place really well.
Well, I know a couple of hotels really well. Yeah, I played poker for a living. I wanted to take my run at it. You know, it was one of those things that I thought I could do. You know, I would see these guys playing on the World Series poker on ESPN, and I always had the attitude of why not me. Like I don't know if you figured this out about me yet. Like, like even it could be like YouTube finance or whatever, but I'm not a fanboy of anyone.
Oh, 100%. Yeah.
So I'm just like, okay, like what do they have that I don't have? Why can't I do that? And that was my attitude with poker, and I was able to do it pretty successfully for over a year, and it was cool. You know, my mission was just $500 a day and enjoy life, work out, golf, live a real healthy lifestyle. I don't smoke or drink or anything, but it was cool, except I just always real tired, dude. Like when you play poker for 8 hours, it's different. You know, it's different. And then sometimes I play for like 19, 20 hours. If you have like a lot of tourists with a lot of money or whatever, you know, you feel obligated to try to take their money.
You never sat next to Phil Hellmuth, I imagine.
No, gosh, no. They call him the poker brat is what he's called. He gets real angry because there's ideally what you should do based on the situation at hand at the poker table. But some people, they reserve the right to be idiots. You know, they can do whatever they want to do. It's their money. And Phil Hellmuth gets really angry if you don't play it by the book. And I'm like, bro, if they want to go all in with 7-2 offsuits, the worst starting hand in poker, that's their prerogative. You know, they're trying to like, you know, have a story to go tell their buddies back home.
All right.
And but he's probably one of the greatest, dude. I'd say he's probably one of the top 5 poker players of all time. I've seen him a couple of times at the Bellagio, but I've never met the man or anything. The person that I did get to meet, and for those of y'all that play poker know, is 2 guys, my quote unquote poker heroes. I got to meet both of them. One of them's a guy named Dan Negreanu. They call him Kid Poker. And then the other guy, which I think is the greatest poker player of all time, but he's never won the main event, and that's Phil Ivey.
Yeah.
So,
I'm not even a poker guy, and I've heard of both of those names, so it makes sense.
Yeah, so it's just like, okay, yeah, those guys are way better than I am. So they're looking 3 or 4 steps ahead. But it was cool, man. Did $300 on black, and my wife was freaked out, bro. And I'm like, baby, it's like $300. like, you know, that's just like a little daily shopping spree for you on one of these freaking Shein websites or whatever, just trying on outfits. But it's different whenever you feel like you're squandering the money, you're not getting any value out of it.
Yeah, exactly.
And I thought it was cool. But yeah, man, it's cool. We're here at some place called the Palazzo. It's next to the Venetian. I've never stayed here before. The rooms are awesome. I don't really like the hotel. It's like super smoky, dude. Like you walk in and it's just like you just.
Oh, that's my problem with Vegas. There's too much smoke, too much drinking. That's why I
did. And I'm like, dude, is it just me? I mean, this shit like hurts you, dude. I was like, this is crazy. Then went to the Mayfair at the Bellagio yesterday. There's like a little show at a restaurant called the Mayfair. And they're like doing acrobats and stuff. 3 or 4 really good looking people doing. Is that like called karaoke, baby? I don't know what they're doing. They're singing. They're like performing and half naked. The guys were half naked, and the women were dressed pretty appealing as well. And you're just like trying not to get in trouble. You know what I'm saying? You don't want to got you with your wife open, with your mouth open, bro.
Well, let's get into our poker, which is wheeling options. And
yeah, this is way easier than trying to go do that for a living. So anyway, the portfolio started off. We started off good this morning. I thought the jobs report was. It kind of came in line, right? I'm not sure.
No, it was good. It was not horrible, but it was not amazing either. So
yeah. So, but then it started tanking a little bit, and why? I don't know, dude. I don't. Stocks go up, down, and sideways. We sell puts, calls, collect premium, roll when necessary if it improves our positions. And that's kind of what we're going to do here today. So I think the first thing that I want to do is I want to announce that I took it upon myself to buy the 500 shares of Palantir already.
Okay, there we go.
Because it's tanking now. So I think that there's a run up, right? I don't know. I got a text from some Palantir nerd yesterday. And he said that today they're going to vote on this bad boy going into the S&P 500 again. Is that like a thing?
Yeah, I mean, look, I don't know if it's going to happen. I hope it happens. I don't think people should really buy and sell just based on that news because it's so speculative. But you're buying 500 shares every week regardless. So
yeah, so I already bought 500 shares. But if there's a Friday sell-off, so that puts me at 2,000. That puts me at 2,000 since we started this project. And we're right in line, dude. I mean, you're seeing it right there. The moves are very straightforward, right? We bought the 5. Is that showing or no?
Yeah, we can see it. Yep.
Okay, gotcha. Because I'm on the laptop. It feels a little different without the mouse. So yeah, so we got the 500 at 31, picked up 500 at 31.34, and then picked up the ones 43 minutes ago at $30.90. If it dips under 30, then I want to go ahead and buy another 500 today, just to kind of lock it, just to try to get a better prices. Because this is technically a DCA model where I don't give a shit what the prices are. I'm just going to buy a certain amount. But then there's also a value averaging model where if the price gets a little bit more attractive, well, why not scoop them up then? That takes a little more work though, right? This one here is more automatic pilot. The other one, like, at the end of the day, we can save 20, 30 cents on each batch. Like, why wouldn't you want to do that?
And your overall average is 16 on these shares right now. So you're up a decent amount.
Is that what it was?
Yeah, 16, 12.
Yeah, 16, 12, I think. Yeah. So I'm hoping to finish this exercise and get to the 25,000 shares. That's the goal. And I want to be under $17.50. That's the goal. We'll see, we'll see if that's able to happen or not. And then that'll probably put Palantir in firmly in top 3 position in the portfolio. I think it's probably already there now, but it'll solidify it. What else do you want to talk about, man? Direct it, because I don't have spreadsheets on this computer. I don't have any of that stuff, because every time I do that, I get hacked when I go traveling. So I have a little journal when I make moves, and then I go to the spreadsheets in the main computer at home, and I update all that stuff.
So let's start with Hood. What are the open positions we have on Hood, and how are they going right now?
So right now we have 5,000 shares of Hood. Sorry, the Wi-Fi here is pretty slow, and we are doing okay on the shares. We're down a little bit, dude. 2% in this market. I'll take it.
Yeah.
So we've got 5,000 shares in 1972, and we're running Strangle, kind of. We've got the shares for sale at $22, expiring next Friday. So that part's doing okay. And then we've got an agreement to buy 2,500 more shares via this cash secure put at $18.50, expiring at the end of the month, 9/27. So we're in there.
Here's what I kind of want to do. Let me pitch this idea to you, see what you want to do. I wanted to do, I don't know if they call it like a little bit of a spread in terms of multiple puts on the same date, but at different levels. So I wanted to do 100 puts.
So that 100 puts? Okay.
Yeah, I wanted to do 100 puts at 17, 17.5, 18, 18.5 on October 18th, if the premiums are worth it. So 25 each on those.
So you want to do I think they call that like a ladder. Y'all can help me out.
Yes.
Because here's the thing. There's only 4 things you can do with options. You can buy calls, buy puts. You can sell calls, sell puts. Everything else is a derivative, and somebody sold the narrative that this is what we're going to call it, and it fucking stuck.
But we got to make it sound cool. That's the whole point, right?
But that's all you can do. You can buy a call, buy a put. Sell a call, sell a put. Everything else is a combination of that shit. Dude, there is one option strategy called the Jade Lizard, bro. The Jade Lizard. Get the fuck out of here. But I mean, there's some nerdy people that sell shit to the marketplace and the market buys it. And then it's known as the strangle and the
I feel like if
straddle.
you become elite enough in options, you get something named after you. Like, I don't like who's like what Iron Condor? Where did that, how did that name come?
Yeah.
That's
So
like
I
a
have this one called the backstop trade where I sell deep in the money or out of the money puts over a year out, but it's a very, very oversized position. And I just started calling it a backstop trade. And that's like kind of the mark that I want to leave in the options community, is that it becomes like a thing, like an everyday vernacular for options traders.
Yeah.
So maybe that's how it starts, right? People have this idea, they want to like keep pushing the narrative, and I want to hear real good wheelers eventually start using the terminology backstop trade. So what are we looking at? You said October. Is that the
Yeah,
case?
so let's do October 18th. Their event is October 16th. So I do think that's a catalyst. Bitcoin's falling right now.
Are you talking about the event in Miami?
Yeah, the event in Miami. Bitcoin is falling right now. So I think that'll create a little bit more momentum as well. Or to the downside, the put premium should be higher today. And I want to do a little bit of a ladder. I think 17 and 17.5 is not going to be the best premium, but it is. Well,
So
50 cents is not horrible.
they don't have the 50-cent increments on this particular options chain on this particular expiration date.
Okay, so why don't we do 16, 17, 18, 19? 25 of each of those.
Okay, so you want to tie up $1,600. So just hear me out. You want to tie up $1,600 for 42 days to pick up $30.
Yeah, so I mean, the premium is not the best there, but the question here is, and I guess here's my question to you: does that ladder strategy at all make any sense, even if the premiums are not amazing? Because at the end of the day, October still is right before the election, so I know the premium is not amazing, but it's safer. Right. That's the whole point. And could we see Robinhood fall to 17? It's possible, which means we might want to.
I just don't think that safe and like Robinhood being a growth stock, like all those things don't really go hand in hand. You know what I mean? So I am a fan of pick a strike that you're comfortable owning these fucking shares, and let's just go there heavier, and then we can always roll this position and adjust accordingly. We've been doing it with NVIDIA, right? We were like at 118, went to 117. I think now we're at like 115. And then if you're right, directionally, well, you maximized your premium. If you're wrong, well, you're going to find yourself managing anyway. And I just don't know, admit that I want to fucking manage something 42 days away when we only picked up 30 cents a share to do it. Like, I'm just like, it's like, that's a glorified savings account. What's the math come out on that anyway?
No, you're right. It's definitely not a good premium. So your argument here is the ladder, even if it's only 25 puts, is not worth it. You'd rather just put 50 puts.
Well, I feel like it's a scared bet. And then if it goes against you, you're going to be so underwater on that initial trade because your break even is going to essentially be 16, right? Like at 16, your break even is 15.70. If this shit goes down to 14, you're so underwater on those shares. I mean, yeah, you can make it up by rolling the position, etc. But it's not that the strike price isn't compelling; it's that the risk to enter into that situation. You're parking money there that you no longer have access to, right?
Right.
So I'm like, where else can we put that money? And then if Robinhood dips to those levels, who gives a shit? We're just buying shares outright anyway. So it's not like we're going to miss out on the opportunity, if that makes sense. Because what's a cash secured put? It's a limit buy on steroids, right?
Right. No, 100%.
That's
why I wanted to ask you if that ladder makes sense, or if it makes sense to just pick a strike.
It makes sense for some people. I've actually used it a lot on the miners. Like I've done that with Rye, but I do it like a week at a time.
And
when it's like I want to be able to scoop up some shares, but and I want to write them out till expiration. So I'm going to wait till the very, very last minute, because if I'm like at the $8 and Riot's at like 780, well, okay, the 8s get assigned, but the 750s and the 7s are in the clear. So all of that's going to free up if I'm just trying to like really build up a position. But I'm more comfortable if it gets to your price target, we'll just buy the damn shares and sell covered calls.
So can we look at Jan 2025 premiums? Because for Hood, for Hood, because that one is also paying some aggressive amounts at 18 or 19, which I think we would be happy to own those shares 18, 19 if.
So trade Hood options, sell put, and you want to go 100 days out or whatever it is.
I just want to see the premiums. If not, we can go back to October. But I'm just curious. I want to get your perspective. Do these even look good to you? So at 19, you get 230. Which would be what, 230?
Yeah. So right here at 18, that's obviously 10%.
That's
So
yeah.
you do 10%, 130 days out. That's probably the equivalent of 25% annualized. I'm just doing top of the head math. I could totally be wrong.
Yeah.
But if you want to do that, do you want to do your little deal there? Your math, your mom's math, right?
Yeah, that's 10%. 10%. That would basically be 2.5% a month.
Yeah. So it's 30% annualized.
Yeah. Roundabout.
See, that's way more appealing than tying up $1,600 for 42 days to make $30.
Right.
In my opinion, right? So I'd be cool here. Do you want to do 50 contracts here? Do you want to do 100? What do you think?
Yeah, I think it's a safer, because I think the thing is, after the October 18th event, if it pumps to 20, I think the intrinsic value is going to start to go down a bit more, and we could close these out early. So I like this at 18. Because at the end of the year, we're hoping for a bull run in the broader market. So we might not have to hold these to expiration, which might be a little bit better than selling the short date.
Yeah, and I like selling in the distance for that, with the idea that, hey, we can get to 50% in a month and there's still 3 months left on the contract. That's a huge win. And it was kind of easy money. So here's a little cheat code segment, teaching segment for you guys. The first 50% of the contract is easier to realize than the second 50%. Like on a longer date, let's say you're a month out. For whatever reasons, it just seems like you can get to 50% profit without any stress. And that's where a lot of people live. Like, that's the tasty trade way. You sell a secured put in the distance 30 to 45 days, manage it 21 days out. You're going to find yourself up already 50, 60%. Move on to the next trade. And you're not dealing with things like gamma squeeze and all of this other stuff because the Greeks, everything is going to get amplified as you approach expiration. Like, everything's so critical. Like, each movement up or down in the stock is going to affect your delta and your gamma and everything a lot more than whenever you've got more time on your side, more time left on the contract. So as you approach expiration, everything becomes more obvious as to whether or not the trade's going against you or for you. And also, if you wait till the week of expiration, I don't know if you've ever picked up on it here. I always have a lot that are expiring like a week from now or 2 weeks from now, but then you'll start seeing them, you'll see them disappear or move different. But I don't normally have a bunch of D-Day scenarios, because that's not where you want to live. Because early on in my career, I was really good at turning winners into losers last minute. Because one little 20 cent gyration in the stock price, the last hour of closing on the closing bell on expiration, holy shit, dude.
It happened last week with NVIDIA. We were up on our puts, and then while we were talking, the thing tanks 3%, and we had to end up rolling it because we couldn't close it out, I agree.
Yeah.
I think let's do 50.
You want to scale into this? Maybe do 50 and then revisit it in a couple of weeks. If it's going against us, we can add, because now it's a shorter time frame. We're making more money.
Yeah.
Or if it starts going in the right direction, well, then we're pulling for it to get to 50% quickly, and then hopefully there's still like 80 or 90 days left in the contract, and we move on to something else.
Yeah, I think let's do 50. That's fair. Shout out to Matt Money in the chat. Pulled in 22,000 in options income in August. That is absolutely incredible.
Good for you, man.
I think that's the goal for a lot of us, man. Even 5,000 extra a month from options for selling options is incredible.
So now look at this, Amit. You're tying up 90 grand for 133 days, and they pay you 9,000 right now. Just keep it in perspective. Are y'all familiar with CDs? Do you know what a CD stands for, Amit?
Corporate debt.
It's a certificate of deposit, otherwise known as a certificate of depreciation. Google. So you give the bank money, bro. You give the bank money, and they're like, "Hey, you can come back in a year, and we're gonna give you a little bit of interest on top of that. You're gonna be losing to inflation, but you're so stupid, nobody's gonna tell you that." So anyway, my late brother Greg Ortiz would call them certificates of depreciation, because people would go to him all the time, be like, "I got this CD," and he would just look at him like, "You're that special kind of stupid my grandpa used to tell me about." But yeah, dude, this a way that banks.
Dude, this type of return, you're not going to get it on a CD whether
Yeah.
it's certificate of deposit, corporate debt. Like, I mean, 10% over 4 months, that the bank's not smart enough to give you. The bank's smart enough to not give you that.
Yeah,
right?
it's strong. This is a strong return. So we're trying to get a little bit more. That's why I'm procrastinating here. So yeah, so this is good, dude. Now we're getting 9,300. I like it. I like it. Now the cool thing with the understanding here, guys, is if this goes against us, we're going to load the boats. So there it is. It already filled. If it goes against us, we're going to add more to these. I wouldn't mind getting as high as 200.
I agree.
Because I think at those price, I'm talking about 200 contracts.
Yep.
Because if Hood goes to 1850 after all of this growth, I think they're already announcing things that they're trying to do in the UK as well, as far as like have a more robust appearance over there as well. So we're like, I think if people need to figure that the world's real big, and at some point Robinhood's going to get into other markets as well. And that's, man, I just think that the growth story is just getting started with this company, in my opinion. So I would like to position myself and to have an adjusted cost basis in the $15, $16 range, and then ride these shares up to 30. And that's a double. And that can happen in 18 to 24 months. You're doubling a portion of your portfolio in 18 to 24 months, bro. You're crushing the market.
100% agree.
So I like it, dude. We'll monitor this on a weekly basis, see how it's going, and we can keep adding to it if things are going against us. And if they're not, well, then we log in a pretty substantial win. There's nothing wrong with that.
Yep.
Which other one you want to talk about?
So what other plays do we have particularly? We have.
So I'm going to go down the list over here of share ownership. I'm just trying to. Here we go. So we've got. Did you already talk? Do you know that NEO's doing well?
Oh yeah. Why don't you talk about NEO? How's NEO's doing for you?
So NEO is going up and to the right, finally, right? So essentially, it's so weird because the market rewards you when you're not a profitable company for just getting on the right track.
Yep.
You know what I mean?
Yep.
Whenever you're a profitable company, even if you stay on track, if you're not doing it fast enough, they'll kill you.
Yep.
So it's almost better to like not be profitable sometimes, right? For some of these companies, but essentially NEO is just losing less money. They're growing year over year growth as far as revenue and deliveries and all of that stuff. But you got to take these numbers with a grain of salt, because there's accounting practices in this country, and then there's accounting practices that are utilized in China, and allegedly NEO has to go through a certain they got to go through like a certain protocol to be able to even be listed on the New York Stock Exchange or whatever. So they should theoretically be doing everything right. But because it is, you're dealing with the Chinese Communist Party, there's a lot of people that are like, I believe you, but not really. You know what I mean? So they're losing less money. They still got probably like almost $6 billion in cash, allegedly. So I think that they have enough. They have enough cash on hand to eventually turn the corner and become profitable. And they recently had a new CFO appointed as well. That is like real, like, hey, like we're gonna stop spending shit on too many champagne bottles and stuff to elevate the consumer experience. Like we need to figure out how to make money, make cars, and lose less money, and eventually turn a profit. Like he's got that mindset, allegedly. Like I don't know the guy yet. It's hard to find like all these interviews. It's not like being able to interview people from Carp. Like that shit's everywhere, right? With these companies, it's a little bit tougher. But I have a bet that they're going to be profitable before they get to 1 million cars. They think they're like 577,000 total deliveries. My bet initially was 750,000, but I don't think they're going to get there. But I think that it will happen by 1 million. And I'm hoping this thing's trading at like 12 to 15 bucks, and I am out of there.
So
trade.
What's your average is 486 if you scroll down.
Yeah.
468. Okay, so you're up 26 grand.
And I've got 20,000 shares that are ready to be sold at 450 at 927, and I've got the other ones at $5 for January, and then I've also got some long calls that I bought at $5 for January of 2026. So
this position is going really well for you, basically.
Yeah, it's decent. You know, it's decent, but it was also there was a time where NEO was like at 370, so I was getting my ass kicked too. You know what I mean? So it hasn't been all hunky dory, if you will. But yeah, right now it's going okay. It's going okay. I'm cautiously optimistic, but whenever you have a very, very risky asset class in your portfolio, I highly recommend it. Again, this isn't financial advice. I'm just trying to do y'all a solid here. I highly recommend trying to get in a situation where you're underwater on your covered calls so that you reserve the right to exit stage left with the win anytime you choose to.
Right. It means the
Like,
stock is going up.
Yeah, but you want to position yourself to be able to lock in the profit because this damn thing could go to $4 next week, bro.
Right.
And then it's just like, oh, you're kind of pissed off about it. So I'm trying to get 20,000 of these shares get called away here at the end of the month. And then I just want to play with the 1,000 covered calls, which is going to be a combination of the 50,000 shares owned and the 500 long calls. And then I want to start transitioning over to long calls only and no share ownership because it's more capital efficient, and just be in a position where I could just flip the contract, essentially sell some covered calls against those long calls, kind of like a poor man covered call campaign here and there. But this is just a contract flip, if you will. Right. But I like my chances to win. I said it all along. I think that at these levels, I can manufacture the win on NEO, and it's kind of going according to the plan. But I am definitely aware of the risk as well. You know what I mean? So I'm not doing a victory lap right now.
Why don't we look at TSLL? Because we have some puts on that, I would imagine. I think we have 200 puts, right?
Shit, bro. Yeah, way more than that. So TSLL is now, it's actually about the 4th largest position in the portfolio, if you really look at it. So I know it's only 10,000 shares, and we're doing okay on the shares. But you got to look at, there's cash collateral of $733,000, via cash secured puts.
Right.
Remember we transferred over the monies from SoFi to TSLL for puts?
Yep.
So that's there. And then we have covered calls at 1150, 100 of them. Covered calls at 1050, and then covered calls at 50. So there's kind of like a ladder, but on the other side of the coin. Uncovered calls for 927 and 1018. And then these are all the puts. We've got 600 of them at 773, 400 of them at 673 for January. And then we've got the long calls, the leaps that I bought, 100 of those at 573 for January of 2026. And if you look here, we're up 32,000 on all of those options combined. There's $64,000 of meat left on the bone, and we're up 7,500 on the share. So it's been a very profitable campaign.
Well, Tesla's done well this week, so that's why that's also helped us a lot.
Yes, and right now TSLL is getting its butt kicked because Tesla's down a little bit, but we're in great shape. We don't have anything to worry about here. If TSLL were to go to our levels here in the $9 range, I'd consider trying to even scoop up another 2,500 or 5,000 shares and trying to ride those up to eventually get rid of them maybe at like the $15 range. This is just a trade. This is a trade, but mathematically it's the trade that I think can make us about $250,000 when it's all said and done.
So markets are really selling off right now. S&P is down at 1%. Tesla's down 4%. CrowdStrike's down 3%. SMCI is down 6%. SoFi's down 2%. Palantir's below 30 at 29.84. Palantir, we haven't seen 29.70 in a while. Dell is down 3%. So I don't really know, guys, what's the need for this sell-off outside of Friday, and the jobs report wasn't as good as the market wanted it to be. And it was a little bit of a delayed reaction. Well, 10:30, we tend to get a sell-off, but it's an aggressive sell-off today. So there was no skating out of the first week of September with no marks. Definitely looks like the broader market's going to get hit.
Can we do a little teaching segment on due diligence today?
Yeah, go ahead.
3 minutes. So we're staying at the Palazzo, and there was people in the elevator. There was like some sort of Jewish conference going on. Can you do it when we're just talking?
Yeah.
This is the difference between the way that I research a stock and probably the way that you research a stock. So this kid's on the elevator, and he's like, did you guys have a chance to meet Trump? And there was like a bunch of MAGA hats here everywhere. And I'm like, Trump's here? And I'm like, it'd be kind of cool to see Captain Orange. I'm not going to lie, right? Just like, I'm sure he's got like a little bit of an aura about him or whatever. I think he's a funny dude. I don't like him on a personal level, but I mean, the dude knows how to make money and work the system, right? So anyway, I was like, well, that's interesting. But we went to our room, came back down. There's like more people from this Jewish conference that are here. And they're like, oh my, and he was like, oh, I just got to meet Trump. It was really, really awesome, this kid. So if that was a stock, you just take it as a grain of salt. You heard one little earnings report. You're like, this thing's going to the moon. So we go back up, get ready. We're going to go to dinner or whatever. We come back. There's more people from the Jewish conference. And then they're like, it was really, really cool. Trump was on the Zoom and he was on point. So it turns out that this dude's just doing a Zoom for people at the hotel. He wasn't physically here.
That's what I was thinking. He was in New York yesterday. Yeah.
But this other kid acted like he was here live and in color at the hotel.
Right.
And I was just like, dude, that's exactly how some people are better at investing than others, because y'all get to verify and validate all this information. And some people are like, they'll read a headline on an article and that's their due diligence. They don't actually read the article.
Right. Because if you thought Trump was at Vegas, theoretically, you might buy that stock, but he's not actually at Vegas, physically. No, that's a good point. I mean, I remember the moment we were
kind of let down because there was like 20 seconds there that we were going to act like a couple of political groupies and just to go see how weird that hair is, bro. I was just like, I have a bucket list. I just want to grab the hair and see what the fuck is going on with that toupee. Is it a toupee? Is it not a toupee? I'm sure a lot of people have already verified, but it's just one of those things that I'm just curious, like curiosity's kind of gotten the best of me there.
Yeah, I think no matter how much you hate or love Trump, like everyone is curious about the guy, Nvidia's at 103, S&P's at 543. So we're seeing a real full-on sell-off in this market. Maybe this is a great day to sell some puts. Maybe
Bitcoin's under 55,000. I've got CNBC over here in the background.
What is there a play you want to make on that, or you want to kind of
I've already made my bet. I was early, bro. I was early. Where it is, right here. So I've gone shopping on this asset class the last few days on Riot. So I've got 100,000 shares now at 839. And in the last couple of days, I bought, or not the couple of days, maybe call it the last week or whatever. I bought 30,000 shares. I bought 15,000 at 692. I bought 15,000 at 669. And I have it in my journal that if it goes under 6, I'm going to buy 25,000 more twice over and get to 150,000 shares, because I think that this is an easy double by the beginning of next year from these levels. So I'm just one of those, like, kind of putting my money where my mouth is.
Yeah, it really depends on Bitcoin at this point. That is going to determine everything. Can we look at Amazon? What are we doing on that one?
Amazon.
We have 1,000 shares of that, and I think we have some calls on it as well.
Amazon, dude, this is position that is really, really exciting because it doesn't cause any stress. So guys,
for those that are asking why is the market dumping, really, I think it's a reaction to the jobs report, but the jobs report is not horrible. So more so, I think it's a just general Friday sell-off. But the actual reason, I don't think anyone fully knows yet.
There's 1,000 shares at 168.96. And then the shares are for sale at 185 and 175 in October. This is one of those that I feel like I should be selling cash secured puts on, but the premiums aren't that great. So I just kind of wait for it to get to my level and I just buy like 500 shares at a time. I'm trying to get to 2,500 shares of Amazon just so that it could be a pillar of strength in the portfolio that doesn't cause any stress. Like, this is a position that I don't ever have to look at. The only time I pull this thing up is when I come on your channel.
Right.
Like, I'm like, and then that's what the portfolio needs to be looking like in times like these, where there's uncertainty in the market, where we don't know who the president's going to be. We don't know if there's going to be a rate cut of 25 or 50 bips. Everything's all data dependent. We're always on pins and needles. Amazon's the one company that I'm like, dude, I don't think that the market cares who the president is. People are going to order their shit on Amazon because it's convenient. And then obviously that's not even really where Amazon makes a bulk of their money. But the average consumer, that's when you think of Amazon, that's what you think about, right?
Yeah.
And I just feel like this company is going to print money, and relatively speaking, they're pretty cheap. Dare I say the word cheap?
I mean,
They're
no, they're one of
attractively priced.
they're one of the
attractively
cheapest Mag 7s, but the street hates that retail business so much. And, that's going to be a question of, can that really grow?
Yeah. And then Amazon hasn't been a very, very profitable company until kind of recently. There might be a lot of people that don't know that.
Yeah.
Like, it took Amazon a long time to figure this thing out, guys. But I think they've arrived, and I mean, to me, this is, I'm super bullish on Tesla, but right next to Tesla, if there's only one company that I can buy from the Mag 7, this is the guy right here.
Yeah.
I think this is the guy that has the most potential to give you alpha that isn't already baked in. I mean, again, these are just my opinions, right? I could totally be wrong. I'm wrong a lot, so take that with a grain of salt.
Yeah.
So,
All right, I think that's it, TJ. I don't think there's that much more to discuss. I mean, the only other thing is Hims, but that's the newest one. Besides that,
yeah. So there's one that I started playing with. That didn't come out right, did it? And that's SOXL. This was a little feeler bet, nothing to do with our little deal here, but I wanted to pitch it to you. The semiconductors keep getting their asses kicked. At some point, I feel like it's got to stop, right? Or this thing theoretically would go to zero to leverage play on the semiconductors. What do you think? I sold 5 puts at 28. They're already in the money. And,
so SOXL, this is a ETF for semiconductor companies, correct?
Yes.
Okay. I'll do research on this. I don't know as much about them. I think it's a smaller version of SMH, or it's at least it's not as expensive as SMH, not literally, but like from a share price perspective. Yeah, look, I don't hate the semis. I just think Q3 is going to be a little tough for them. But Q4, I mean, NVIDIA's numbers were amazing, but the street doesn't like it. That's why all the semis are getting hit. So if anyone was going to long semis, you want to get them not when they're at the top, right? When they're closer to the bottom, which is what you did with that put. But it's just going to be a question of how Q3 plays out for them and on earnings.
Right. What do you think about Hims? We've got some puts.
I like this one. I like it.
Yeah.
If we have to own it at 1350 adjusted, I don't mind that, dude. And if we have to build the position higher at 1250, I think if that's a 5,000 share position over the next few years, that's also one where it's risky, but their growth is phenomenal, and you just let it play out.
So I want to wrap it up with another teaching segment, if you don't mind, and that's on NVIDIA.
Yep.
So I did a little chart study, and I'm not a chart master or anything, but I do understand astrology for men. And I saw
102. Wow.
I saw where NVIDIA was going. And we have 500 shares at 125. So thankfully, it's a pretty small position.
Yeah.
But we do have an agreement to buy 500 more shares at 115. Correct. That's not what I want to talk to you about. Is I took it upon myself to sell covered calls at 125 as a hedge to the downside, expiring on 9/27, because we need to bring some more premiums through the door to keep lowering the adjusted cost basis. Because if not, NVIDIA can turn into dead money, because we're not going to be able to sell covered calls below our break even, if you will.
Right.
And so I did that on 9/3, and we're already up 72% on those covered calls at 125. And the reason I didn't call you to tell you, Amit, is because I didn't think that you would want to do it.
No, but I think
I want to talk about my mindset towards you, and if we could just talk a little bit.
No, I think that makes sense, dude. Because you sold it when it was at what, 110. You weren't going to get premiums at 135.
Right.
You had to get premiums that are, and also our adjusted cost base is 118.
Yeah,
so
it's actually now it's like 114. Yeah.
Yeah, so technically 125 to me. I don't think
no, dude. Our adjusted cost basis on NVIDIA is like $95.
Oh, right.
Yeah.
Right. Because we won the covered call campaign on earnings. You're right.
Yeah. So we've done okay on this.
And this is important, because if you know your adjusted cost basis, you have the ability to sell covered calls at a aggressive strike and not think that you're losing money because technically you're not. Right. I agree. I think it's a good idea. I think it was a great idea. Here's my question. Do you want to close those out? Because we're up 70% and write a new set of, well, today's not the best day for that because it's down.
Yeah, no, I mean, I think that there's zero pressure on those. So I'm not a fan of giving premiums back when I don't have to.
No.
Because it's like, okay, cool. I close them out. We just lost $200 that was there to be had. But then now what are we going to do? You know what I mean? And then NVIDIA goes to like $90 and they're like, well, shit, we could have at least gotten that $200, realized that $200. So I don't think that on when you're winning a trade, like, and there is no reason for you to like stop winning that trade. I think that you should probably max out the premiums that you can collect, in my opinion. Another one that has been kind of picture perfect. I feel like you haven't really been behind this trade too much, but you're also not opposed to it. You're indifferent, I think is the word. And that's on our American Airlines position.
Yeah. Yep.
Like, this is kind of one of those, like, well, I don't care if it's in there or not in there, but look at how it's worked out for us. So, and granted, it's only 5,000 shares, so it's a smaller position, relatively speaking. So we're up on the shares, and then we've got commitments to buy more of them at 10.50, to sell them all at 11, and to buy more of them at 10, all for the end of the month. How do you feel about that position? It's pretty low stress, right?
No, I like it, dude. I mean, I said last week this was boring, and you said good, right?
Boring is good. Boring is good because we don't have enough boring in the portfolio. You know what I mean? So it's it's been really, really, really good. Super excited about it. Other thing that I started doing here, guys, is I'm sorry, I'm picking up steam now because I'm awake. Other thing that I did is I started selling cover calls against SoFi because I saw the technical breakdown on the chart. So I now have 1,000 cover calls on SoFi at 850 for 927. And then I've got the 500 cover calls that y'all saw us roll live on this channel for $9. So I've already got 1,500 cover calls against the 150,000 share ownership. And then I've got all of the cash secured puts at $8 for January. And then I've got all the leaves for January of 2026. And we picked up money right here on these guys right here.
Well, I don't hate this either because at the end of the day, SoFi is still SoFi. And
yeah, so we picked up 13 cents a share, $13 a contract. So about $13. And we're already up 53% on that cover call campaign. And again, this was strictly as a hedge to the downside. I was like, cannot afford to have all of this money tied up on SoFi when SoFi is like a cup with holes in it. It can't hold any water, right? Like, it can't hold any gains.
Yeah, I mean, it's 9 cents away from going below 7 right now. Market's taking, so the covered calls as a hedge is not a bad thing right now. S&P is at 542, Bitcoin at 54.6. Goodness, dude, that's nasty.
So let's wrap up on the stock of the channel, which is Palantir. So what are your thoughts? I mean, have you already told the channel if this thing's getting into the S&P? Because who are the last guys that got into the S&P? Was it CrowdStrike? I don't follow this as closely, but I feel like it was CrowdStrike either the last time they had a chance to vote, or was it something else?
It was GoDaddy, KKR, and CrowdStrike. Yeah, those three. I think we could get in, but like, I don't trust that committee because.
Okay, so what? Okay, cool. You get in. So what? What does that mean exactly? Like, just a lot of institutions have to buy it.
Yeah, it's really a badge of honor. I mean, it means that we are one of the top 500 companies on the planet. If we get into the S&P, there's other ETFs that would be more likely. Because Palantir's not in a lot of ETFs. Like, the people that own it are people like you and me, and then hedge funds. But like the VTI, VOO, these ETFs don't really have a ton of allocation to Palantir like they do to Google, Amazon, etc. So the more ETFs you're part of, the more it's harder for people to sell your stock if you have a crappy quarter, because the ETFs just have so much allocation to it. So I think it's a great thing. I don't know if it'll happen. I hope it happens today. I think it'll be amazing, but I don't trust the committee because the institutional ownership is really bad. It gives Palantir more legitimacy. That's another thing as well. Yeah.
So I was able to scoop up another 500 shares at $29.64. It's better than buying them at $30.60. So there's that. So that puts it at 22,500 shares, I think.
Yeah.
And then also what it does, guys, is I'm able to chill out on these covered calls that are deeply underwater at $12.
You're planning to let those be sold, or you're planning to?
No, I want to be able to roll them, but I want to wait till the last possible amendment.
Okay.
So that I don't have to give any of that extrinsic value back.
And you think you could probably get $20 on the next roll for them?
That's the goal. That's the goal. So I mean, look, it's picked up a little bit of money today. Yeah, I want to be able to roll these to January of 2026, and I want to put a 20 handle on them. So I want to go over here, and I want to go to $20, and I want it to cost me less than 20 grand. See, right now we're getting closer. It's 23,000 because I go from a 12 to 20, so that's $8 of capital appreciation on 5,000 shares. That's 40 grand. And if it cost me 20,000 to do that, that's still a net positive of 20 grand.
Correct.
And I'm going to keep playing that. And hopefully in the next 5 years or so, I look up and I got a 60, 70 handle on these covered calls and Palantirs at that level. And I caught up to the stock.
Right.
And if not, well, then I already scooped up 10,000 shares in the $14 range. And then I scooped up, 5,000 shares in the $30 range. So, I'm still in it. You know what I mean? I'm still in it.
Right.
So that's the thing. I mean, it's a long-term play. I got caught in my hand in the cookie jar. You have to own it and accept it and move from there. But I've also been playing this one right here that people don't talk about. Is this $30 cover call for the end of the year or the beginning of the next year. And I have not freaked out and done anything because the bulk of the position is for sale right here at $30. And I'm not even going to deal with it until November, December. And then I want to kick the can down the road a year, and I want to go from 30 to 40 because I don't want to sell weekly and monthly cover calls on Palantir because the only thing that it does is it causes me stress and consternation, dude. I don't want to do it. It's a hassle. I don't want to do it. I'm just like, okay, I'll go from 30 to 40, make a shitload of money potentially on the capital appreciation, and hopefully I'll make some on selling the calls. But this isn't a premium play. This is a capital appreciation play. And that's why it looks the way that it looks over here is up almost $300,000 because I know what we hold in Palantir, dude. I think that this is going to become minimum in the near to short term, $100 billion company. And I think it's 5 years away from being a $250 billion company. So I want to, go along for that ride and get the loaf of bread, which is the capital appreciation.
Right.
And I'm not selling cover calls on those 500 shares that have been bought week after week.
Yeah.
I'm just kind of letting those ride as well. So I don't know, man. I feel good about Palantir. I don't know if it matters to me whether or not they get included or not. It's like you said, it's a feather in the cap, but I don't think it's going to determine anything. I think Palantir just needs to keep pumping up the numbers, keep doing everything right, winning contracts and getting rewarded for trying to do the right thing, right? Which is protect the West and the values and all that stuff.
Yeah, I agree. And I think S&P inclusion, if it doesn't happen this time, it's going to happen next year. So whenever it happens, but it will hopefully happen soon enough.
Well, that's it, brother. You want to do your word of the day? I'm going to order a very overpriced breakfast on this freaking room service.
Yeah, you're gonna have to pay like $50 for that. That's okay. We made 10,000 in selling some puts today. That's not horrible. Word of the day is Google.
Google.
I've heard of this number or this word before. A number that is equal to 1 followed by 100 zeros. Yeah, I've heard of this before. I'm pretty sure plenty of people have heard of this before. Sounds like Google, or looks like Google, but it is Google.
So how do they have it in a sentence? Like, does it give you all that or not?
It's a mathematical thing. The concept of a Google stretches the limits of human imagination, illustrating the vastness of numbers. She joked that it would take a goal of years to finish all the chores on our list.
Huh.
All right. There you go.
Interesting. Well, awesome, brother. As always, appreciate you. I don't know when it happened, but I saw that you have over 40,000 subscribers now.
Yeah. We hit it this week. Not too bad. Just got to keep grinding.
How do you feel about it? Dude, also another thing, I don't know, I'm sure people have seen it. What's the dude's name? The other dude that's always wearing polo clothes on your channel?
Oh, Amir. Yeah.
He interviewed you.
Yeah, he did. Yep.
He interviewed you, and I saw it while I was grabbing a workout the other day on the treadmill, and I put y'all on 1.5 times speed. Dude, it's real hard to listen to you on 1.5, by the way.
Good. That's good. That means I'm succeeding. That means I like talking fast. I like making sure people come here and there's value, because I watch other YouTubers where it's so slow, and some people like that. But I think people that are used to my channel, they're like, it's like I'm on blow every day. I'm from Vegas every day. I'm just running.
And it's funny that you were saying that, and you were doing this little tick with your mouth that you were doing, and that's kind of what people on cocaine do at the poker table.
Exactly.
They have like a tick. I think it's called a tick. But anyway, what are your thoughts on the trajectory and everything? And I feel like he asked you a question, and I feel like you kind of answered it, but you didn't really answer it. Do you think that having this channel has made you a better investor? Because I remember watching a pod, and you're like, you didn't even know what a market cap was.
Yeah, that was back in 2021. Yeah, I think so. I think my answer there, and guys, CJ's YouTube in the chat. You can subscribe to him here. And if you want the email, if you want the wheeling spreadsheet, email amit@dailypalantir.com, and I will send you guys. I sent a bunch of them out last week for the TJ wheeling spreadsheet. Yeah, I think the cool thing about the channel, and I think it's made me a better investor, because I condense so much data every day. I get to learn from people like you on Fridays, right? Like when you're forced to learn about something, you really start learning about something, and you can make better decisions based on that. Doesn't mean you're going to make the best decisions or the best stock picks, but it means you have more data and you're reading more. Like I'm reading so much more, listening to so much more, learning so much more, and hopefully over the next 10 years that plays out.
Absolutely. And then for the next one, we'll leave it for the next one. If Bitcoin keeps tanking, we do have that BITX play that is now kind of underwater. So it might be an opportunity to add to those as well.
To double down on those. Yep.
Yeah. Awesome, brother. I got to get rocking and rolling. Appreciate each and every one of you guys, man. Much love. And I'll hopefully be home for the next one.
TJ the Wheel Deal. Thank you. His YouTube's in the chat, guys. You can check him out. I'll put it in the description as well. We'll see you next Friday.
Take care, my man. Bye-bye.
Bye today. All right, guys. Market is crashing pretty disgustingly. Let's call Kris. Let's get his perspectives on what's going on and kind of explain it. I don't really know why it's crashing that bad other than a Friday sell-off, but maybe it's the jobs. So let's see if Kris has any perspective on that. And then we'll try to make sense of everything else we got going on. Kris, what's up? How are you?
Hey, dude. Morning.
Morning. Have you looked at this market in the past 20 minutes?
Yeah. Everything's in the red. Nvidia especially is leading the pack down.
And I know you're smiling very aggressively because of that.
I'm not.
You're dude, you're smiling. I can literally feel you smiling right now. Like I can literally feel it.
Nope, not until it gets to $50. When it hits $50, then I'll smile a little bit, because then it'll be like, oh, well, Kris really did try to tell us, like, hey, wait a second. The growth story on Nvidia is a little bit broken right now, and the valuation is absolutely nuts, and it needs to just come down. So it's hard to fight. It's hard to fight the current trend. I know a lot of people are very bullish on Nvidia, and I am bullish long term on Nvidia, like going 5, 10, 15 years out, I think. But you have to remember, there are certain fundamental rules when it comes to certain businesses that, they're going to impact you. And one of the ones that it's going to be impacted is like semiconductors being a cyclical business. And now you're starting to see that maybe future demand may not exactly be all there. So this is not a crash, it's a correction, where valuations just need to make sense again. And eventually they will make sense. Now, could they overcorrect and hit $50? Maybe. I wouldn't wait to buy at $50 if I'm bullish on the sector and that. Like, if it gets down to the 70s, that's when, you know, you should start to look at it in like a more like, hey, you know what, this is a real opportunity. And the market, you tends to overshoot on things. Like when it comes to it, it tends to overshoot on the upside, and it also tends to overshoot on the downside. So
what is your
really
logic? We'll talk more about NVIDIA, but what is your logic for the sell-off right now? I mean, what was your take on the jobs report, and do you think the sell-off is warranted off that?
I mean, there's a couple of things. Like one, the economy is definitely weakening. So right now the Fed is going to be tempted to do some cuts, right? The problems that tend to happen when the Fed starts a cutting cycle is that people are going to be wondering, when is the next cut? And then the next cut and the next cut. And what ends up happening is, because of like that next cut feeling, people cut back on spending, especially on big capital items. And that may be a cause for, you know, just a quick slowdown of about 6 to 9 months. You know, we also have the uncertainty around the election that's always there. So if I had to guess, I'd say that, you know, we're seeing a correction right now. We could see a rally by the end of this year and get a Santa Claus rally. And then we could see another like just down to flat year next year, if, you know, we're basically we'll go down mid-year and then we'll come back up again and all that good stuff. The one thing I will remind everyone though is that just be in the market. You don't have to like look at the portfolios every day and be like, oh my God, I'm down again. Like, no, it's all paper, you know. Now, if you want to play it like a little bit more, how do I say, like a little bit more aggressively, you can always do what I'm doing right now, which is, and this is something I spoke to all the Patreon people about, is just be in different asset classes that aren't necessarily impacted by equity moves nearly as much. So if you go to my Savvy Trader, like most of my positions, like right now, are in like preferred equity.
Yeah.
That like it's not moving anywhere, and I'm still getting a really nice fixed return, you know? So that's the thing. Like, so a lot of people, I'm looking at like the Savvy Trader portfolios for a lot of people. And the one thing I've noticed is that they have a huge market gyration where sorry.
No, you're good. You're good.
Yeah. So at one point, some of these people were up 20, 30% for the year. And now they're down to like flat to to nothing. Whereas me, I kind of like reposition myself into a different asset class that was undervalued, that's going to benefit from rate cuts, and it doesn't have the same equity-like exposure. So I think right now with retail investors, we need to broaden our horizon a little bit and look at things like fixed income, look at preferred equity, right? These are areas that tend to do well during a rate cutting cycle because they're not dependent on the business. It's more dependent on like how the capital markets work with the underlying businesses. So, you know, these are the kinds of things that, like I said, we should be looking at for next year. I wouldn't necessarily want to go like buy things that are relatively overpriced from a multiple standpoint until the Fed is done hiking. When the Fed is finally done hiking, then we're good.
Let me ask you this question about the jobs report. I think that makes a lot of sense. We added 142,000 jobs, but a lot of those were government jobs as well. And there's a revision coming up. Do you kind of feel like that number just doesn't matter at the end of the day?
I mean, it's shooting to the downside though, right? It's still missed expectations.
Yes,
Everything's about expectations. If you are expecting something and it doesn't happen, then that means that you're wrong and you're probably headed in the opposite direction. At least that's how the market interprets it. So when it came to NVIDIA had a freaking amazing earnings, but the problem is their expectations were just too high, you know? So in the short term, it's all about expectations. If you have really high expectations, it's more than likely that you're going to get burned. If you have low expectations, you're likely to beat those expectations, in which case now the market's going to be like, oh, maybe I'm wrong. Maybe I need to buy this thing, you know? So follow the expectation.
Yeah, I agree. I think the jobs number, it still was below expectations, even though it was good. What do you say to people that say a lot of those jobs were government? Like, do you think that matters, or is that still?
It's still money. It's still money going into the economy, you know? I mean, I personally think government spending is one of those things that's a lot more durable than private payrolls, because private payrolls, you know, they're always like moving up and down a lot, you know, because they're more tied to market forces than the government, which is more like slow to move on things. Like, when have you ever heard of a mass layoff in the government?
If Trump and Elon, do what they do, maybe
even they know it. The government, I think any politician that comes on right now, they really need to, I wouldn't say shrink government, but at least consider, not letting it grow at the same pace that it's been growing all these years, because you want a healthy government employee base that's going to, take care of the populace, but you also don't want to turn into a giant bureaucratic nightmare where literally people are just, occupying space. And that's what it is. And that's what tends to happen with a lot of government jobs, where people get too comfortable, they're unionized so they can't get fired. And then it's like the fucking DMV, where it takes an hour to do something that's like simple as hell, You have to go and fill out this form, and then that form you have to take it to this asshole, and then this asshole has to approve, and then this bitch is on vacation. Dude, I'm telling you, I dealt with this nonsense because I was selling my apartment. I finally closed on it, right? And I needed approvals from a couple of people in the city, right? Because the way that my building was structured, it had some subsidies from the city. Bro, I'm telling you, it was like a nightmare for the last 4 months to get anything. Anytime I needed anything, it was like a bureaucratic nightmare to go through this process, Right. So government also has a tendency to kind of become really, really sclerotic if it's not continuously checked. And I think that's the one good thing with Elon and Trump. At least they're taking a second look at it and saying, you know what? Let's look at some government agencies and government departments that are basically there, and they have a fancy name, but they essentially, they're just roadblocks in between progress.
So Kris, why, there is a lot of reasons to be bearish. Why are you still bullish that the rest of the year ends good? What is your core thesis that the year still is going to be okay?
Well, there's a couple of things. The consumer's still doing pretty okay.
For example, well. before you continue, the yield curve, right? Inverted, now uninverted. Yeah. And as you said, that is historically a sign for a recession. So why are you still in the market if you think historically the yield curve uninverting and reinverting again could create, a recession like it has in the past?
Well, there's two things. Number one, I just said I'm more in asset classes that are a little bit more secure, right? So I benefit from the recovery in those asset classes that, like I said, they're not dependent on the economy per se. They're more based on the availability of credit. So that's one benefit that I have. But then also, if you think about it, it's just like what I said before, expectations. Now expectations are being dialed back, and now they're going over corrected mode, right? Where the expectations are getting dialed far too low. So as long as the consumer's doing okay, I think that we have a strong chance of a good Santa Claus rally. Right now, as far as I can tell, we do have a bifurcated consumer where the people at the bottom are, really not doing that great. And then the people at the top and the mid-level, they're killing it in this market. The question now is that thing going to eventually correct in the next couple of quarters, where either the rich are going to feel the pain of maybe the stock market going down, or are the people at the bottom going to get some relief from interest rate cuts, in which case capital is going to be more available to them,
So you think rates coming down still creates more liquidity, creates more business cycle activity, and leads to a less overcorrective territory, less restrictive territory that we're in, that is still bullish because earnings growth is not going to deteriorate. It's actually going to have more momentum if we cut rates. That's your bull case.
Yeah, that's my bull case. The other thing is, you also have to remember, people are going to be chasing money, going next year. Right now, there's a lot of money that's basically, satisfied with money market kind of level returns, about 5.5% risk-free. They're just chilling. So next year, if rates go down by a significant amount, in which case, like that right now, if you look at the Fed Watch tool, the Fed Watch tool is predicting a lot of cuts, and they're going to be really fast cuts. That means by next year, money market is going to be giving you 2%. And what are you going to do with 2%? That's not even going to cover your inflation. So people are going to go out venturing into the markets again, looking for opportunity to basically make a good amount of money so that this way they can beat inflation and have like real spending power. So a lot of people at the top right now, they're just chilling. They're like, hey, I'm getting my income. I don't really need to deep dive into this market. But maybe next year you'll see like a kind of an opposite trend where now people are going to be more likely to take on some risk,
Right.
And hopefully by then multiples compress too, because the other thing is right now multiples on certain industries have just gone haywire.
Like Nvidia.
So we really needed them to come up. Yeah, like semiconductors in general. I showed that chart to everyone and people just not fucking believing me. They're just like, no, you're wrong. Semiconductors are going to be in the cyclical bull market forever. A 30 PE, which is like never happened in the history of like semiconductors in terms of valuations as an index. That's normal. I was like, no, it's not.
But to be fair, semis were never growing as much as they've grown over the past 18 months, right?
That's true too. I can't deny that. That is true. But once again, remember, this business is a cyclical business, right? Yeah. So if the cycle is going to be coming down slightly, because maybe, like I said, this whole AI thing, maybe right now there is a digestion period within these hyperscalers where they don't order as many GPUs. Dude, that's gonna end up setting the expectations on the low side now, where now all of a sudden people are gonna be dumping the stock because they're like, oh, the Nvidia is a broken growth story. I mean, the thing is, you have to realize when it's a broken growth story, what everyone else thinks it's an unlimited growth story. So that's why I do have some regrets that I didn't short SMCI. Like, I put it on my Patreon that like we should short SMCI, but I never did because I ran out of capital. And because I just closed on this deal now, I actually have some money.
Did you get a decent amount of money from this real estate deal?
Oh, dude, I got 6 figures off of it. Yeah, I did really well.
Do you have to? That's after taxes, or you still have to pay taxes on those?
No, that's after taxes.
Wow. So you have 6 figures to now invest in Nvidia.
No, I'm not touching Nvidia right now. No, I told you, my goal right now is to get myself set up to the point where I have a good amount of money coming in a very safe, secure way. Because like, ultimately my goal is to use my investment income as my primary source of income and let me do other things. Right. And that should be like the goal for most investors, where it's like you want to set up multiple lines of income coming in, whether that be through stocks, whether that be through investments in real estate, even like businesses. I know some people that basically they have like silent partnerships in businesses and they're just literally collecting money, so I'm setting things up like that for myself so that I have this cushion so that in the future, if I want to take more aggressive bets, I don't have to worry because my house money is already covered,
What do you think about oil, dude? It's at 68. Like, is this an opportunity or?
Talk to Matt about it. Matt will give you the inside loop on oil. Matt told me not to touch anything oil.
No, he told me to not touch any oil either. So,
yeah. So, I mean, you got to listen. The fact that we have industry experts like that able to kind of share their knowledge, dude, we should just trust them. If like, here's an example. I remember when Steve was talking to me about SL Green. Because Steve works at a SL Green building. He sees exactly what's going on in the sector and in the industry. So when I went to New York, that's exactly what I did. I looked at, I spoke to people who work in that industry and they told me, it's like, yeah, recovery is happening. It's not happening at the B and C level buildings, but at Class A and Trophy, they're absolutely killing it. Leasing rates are going up. So this is where you have to like look beyond just the fundamentals on like the balance sheet. You also kind of have to do research into like the specific industries, and having industry experts in like that you can reach out into and then you could call, dude, that's what I'm hoping that you're able to develop that and then bring that to the retail community.
Yeah.
Where you're speaking to like yesterday when you spoke to the the Granite Shares guy. That was a great interview. I thought that was great because it kind of explained things, to saying to people like, okay, what does these leveraged ETFs actually do, and how do they produce that leverage, right? So these are things that retail investors, either they're not necessarily like actively, they don't have the time to look things up, but insights like that are like, they're worth their weight in gold. And I'm not surprised at the level of growth that you're showing, especially lately with the channel. I think it's all because the quality of guests that you're bringing on are starting to like become become up there. And I could definitely see eventually having a million subs.
Well, you're the main guest we bring on, so you complimented yourself right there, which I like. That's good.
I think I bring I think I try to bring some logic. Sometimes it's welcomed and sometimes it's not welcomed. And like I said, I'm wrong a lot too. So don't take my word like, oh, Kris is always right. Like, no, Kris is not always right. Trust me, I've missed my fair share of gains in certain things. But I pride myself, and this is something I tell my Patreon people. I pride myself on not losing money. You know, if I can't make you money, screw it, whatever. That's fine. You know, it's missed opportunity. You'll get over it.
Yeah.
I just don't want to see anyone blow up their portfolio.
Right.
That's the part that like really is something that when we talk to people and when we try to like bring information to people, that we make sure that people understand like how something could be risky and something could be not as risky. And so the goal is everyone needs time and duration, and over time you should be doing really well in this market, you know.
Okay, last two rapid fire questions for you. Celsius, buy or no?
No, not yet. Not yet. Eventually, you're going to have Celsius become a really good value play, but it's not right now. Like everything that's going on with Pepsi and everything. See, Celsius is another classic example of how expectations went haywire. And then now that the expectations have been dialed back, you're seeing this massive correction. So if you go back earlier in the year, and I was very bullish on Celsius, right? But then what happened with Celsius? That shit just ran up to $100. My price target for 2026 at the time, at the current growth rate, even with some built-in like conservative safety readjustments on what the analysts were saying, I was like, okay, this could be like $100 by the end of 2026. But the minute I saw that the growth started ticking down, I got the hell out. I was like, well,
So I have on the
case.
screen right now. You have these short calls. These are printing for you because
Yeah.
Celsius has fallen, obviously.
Yes. Yeah. Now, let me clarify something, okay? What I did was I bought calls on Celsius. Those calls ran up like crazy, okay? What I ended up doing was now, because I had those calls, I was like, what could possibly happen? Now, the thing is, if I just basically sold those calls, I would have had to eat a giant capital gain. I would have got short-term capital gains, and I would have had to pay that.
Right.
So what did I do instead? I actually sold in the money, right, against my calls that I bought, and took all that money and put it into like my profit zone. So now, if this expires worthless, I don't really care, you know?
Right. Right. Yeah,
So.
and it's a way to hedge against the downside aggressively, and obviously we saw Celsius go down.
Yeah, that's the thing too. Like one of the things I wish TJ would do sometimes is sell deep in the money.
Yeah,
like he has this tendency to basically be like, I want to sell like, you know, out of the money calls. But the thing is, if you know that you're going to get a correction and you already hold the shares, dude, just sell deep in the money calls, especially if that shit is overvalued. And then you could basically let the other guy on the other side worry about the problem. And now you have liquidity that you can do stuff with, you know, and just wait until the thing plays out.
Right. All right. Last question for you. Tesla down 5%. Are you interested at all in this one?
No, man. I think Tesla's a great company. Don't get me wrong. And I think eventually there will be a tailwind in Tesla with a lot of the developments around FSD and all the other stuff. But right now, the general economy is slowing. And the one thing is capital purchases are likely going to kind of slow down because people are going to be anticipating the next rate cut and the next rate cut and the next rate cut. So businesses, individuals, I think right now people are going to be dialing back on spending until the rate cutting cycle is finally done. So I think once the rates cutting cycle is close to being over, I think that's when people should really look at companies like Tesla, which benefit significantly from consumer credit availability.
Okay.
You know, the area, by the way, the area that we should be looking at, maybe one day we could do a podcast about it, is basically around the real estate industry, but not necessarily physical real estate itself, but the services around the real estate industry. So at my closing yesterday, dude, there were, and anyone who has ever closed on a house or, you know, a property, you guys will know, you'll be sitting there, the closing attorney's on the other side, you're sitting on this side. There's about 4 or 5 people in that room, and every one of them is making money. All right. There's the mortgage issuer, like the title company and all that. They're making money. The law firm that's doing like the closing, they're making money. The local government, they're making money because they're getting taxes for all this other little thing, right? The entire process is just money on top of money on top of money. And it's all high margin money because all you're really doing is just moving zeros from one place to another. So as an example of something that I was talking to last time was the private mortgage insurance companies. Remember we were talking about that?
Yep.
Right? Like that is a really great business to be in because mortgages for the most part are pretty secure. All you're really doing is just covering a piece of it. And you're getting this like high margin revenue that you're just using to do whatever with, you know? I mean, some of it you got to hold on your balance sheet, but right now, you know, like these are like the hidden industries that are out there that have like this up and to the right business model that no one really like talks about, but they do extremely well, you know?
Yeah, no, I think that's fair. And I think finding some of those derivatives off of sectors that are hopefully going to do better, like housing and real estate is, important to think about.
Yeah, real estate itself, I think like probably 2020, the middle or the end of 2025 and 2026, I think real estate's going to make a really good comeback in terms of transaction volume. I'm not going to say that transaction prices are going to recover, but transaction volumes going up is really beneficial, especially for companies like Redfin and Zillow and stuff like that, that they make their money purely based on the transactions that are happening. Like, look at Zillow right now. With everything happening with the market going absolutely shit, Zillow is up a little bit right now.
Wow.
Can you believe that shit?
I can't. That's incredible. Wow.
Look at Redfin. Redfin is barely down right now. You know, that's because when rate cuts happen, people are going to be buying and selling homes again, and they're going to be doing it at levels that we saw back in 2020 and prior to that. So, you know, like I said, I wouldn't necessarily invest in real estate itself, but I would be very bullish on all the companies that support the transactions. You know, and like I said, it's all high margin business because it's just moving paperwork from one place to another and moving zeros from one place to another, you know.
Right.
And believe it or not, someone was talking to someone in my comment section on Twitter said SoFi. And I'm like, you know what? That's not actually a bad idea to look at that. If SoFi especially can, you know, goes into like the home, like origination and servicing market, that could be a tailwind for them.
No, that could. That's a good point. Yeah, that's fair.
Because I mean, like I said, if you already have a client base of good creditors and you're basically like providing, like I had, you know, when I bought my condo, I had a SoFi mortgage.
Oh, you did?
Yeah.
What did they do to you to make you so bearish? What did they do? Did they hurt you somehow?
Nothing. It's just a bank. That's the problem. You know, they're a really good bank, but they're just still a bank, you know? So the thing is right now, they're impacted just like every other bank is impacted. So the key right now is in the future, if home prices, you know, start to stabilize, you know, interest rates come down, which means that people have the availability to buy homes and sell homes again, and transaction volumes go up, dude, SoFi is going to make a killing on originations. You know, they're going to make a killing on all the service fees that are paid between buyers and sellers to do all these things. Trust me, when you buy your first property, Amit, it's going to be an experience, and you're going to be like, wow, this is like a crazy thing that's happening. But at the same time, you can see where money is actually happening, you know, where money is being made in this industry.
What do you think the average price of my first investment property should be that I want to also live in? And what do you think my mortgage should be? And what do you think the down payment should be? Like, is there a range for you that is a reasonable range?
Well, first you have to figure out where you want to live.
No, but let's say it's like not New York. Let's say Jersey City, Hoboken, right? Little upper parts of Jersey. So it's not going to be like, you know, $200,000 house or anything like that.
So the first thing I'd say to you is find something that, number one, is that can have like future value. Okay, so usually like homes that are in areas that are gentrifying, that's where you kind of want to buy. So you don't want to buy in a really nice neighborhood because the prices that you'll pay won't really give you a lot of ROI for that.
But close to the city, I feel like always has appreciation.
Say that again?
I think Jersey City, Hoboken, like close for people that don't know, those are places in New Jersey that are close to New York City. I feel like those are always going to be great buys because it's close to Manhattan at the end of the day, even though it's not.
Yeah, yes and no. I'd also look for something that has close access to public transportation, because what tends to happen right now is the city's becoming bigger and bigger, but the car, like just the ownership of a car and everything else is becoming a lot less favorable. So, you don't want to buy a house in Jersey City where you get off the PATH train and then you have to take another bus, like, and 20-minute, 30-minute bus ride again. That's just, you want to find things that are convenient for the people moving in. So here's an example. Like when I bought my condo, I bought it in Williamsburg. And one of the real reasons why I bought it was, one, the neighborhood was starting to kind of like get better, but it wasn't like, oh my God, like really nice, but it was getting better. But what was also really good is that it had easy access to the L train that went right into Manhattan. So you could be in Manhattan in literally like 10 minutes. So as all these people, these young urban professionals or yuppies, they started moving into the neighborhood, they all wanted easy access to the city.
Yeah.
So they started to bid up everything. And I'll be honest, you know how much I made? Almost 300% return on my home. So I bought it for 135 and I sold it for like 430.
The recent one that you sold in New York.
Yeah.
Well, did you put 20% down on the mortgage?
Nope. I put down 5%.
So that's another question I was going to ask you. Like, if I'm a first-time buyer, there's loans and stuff and like things available to not have to put down 20%, like the average buyer would, correct?
So there's a lot of great, like I even got, for me, my mortgage was a Sony May mortgage. So I actually got a down payment assistant like loan from Sony May. And it was really interesting because I barely paid anything as a down payment. But the thing is, like, I bought it during the time when we had the great financial crisis. So
right.
The city and state were like really like pushing people to buy homes at the time. So, but I think there are programs out there like that. So one of the things that everyone should do is look if your city and state has some programs for first-time home buyers, because a lot of them do. And even sometimes like the mortgage companies themselves have certain rebates that are built in where they'll say, like, as long as you like live in this property for a certain period of time, or you keep your mortgage with us for a certain period of time, like you'll have like a loan, but it'll be like a forgivable loan, So like for me, that's the kind of loan that I had for my down payment. So I put down maybe like $5,000 for my condo at the time. All right. And I didn't really have to even come up with a lot of money during closing or anything. I just had to put in some deposits and stuff for like the maintenance. So like I said, but that was like a different time.
Like the problem is waiting for a big crash to buy is just like, it's tough to do. You don't wait
for crashes. Like if you need a place to stay, you need a place to stay. There's no getting around that. So one, I'd look for public transportation and infrastructure, and also find something that has like businesses that are starting to like grow around it. Usually a Whole Foods is like a good indication that the area is starting to get better. So if you see Whole Foods being built around it, buy some property around there. I guarantee you're going to do well, So there's certain businesses, when they start moving in, like you just know the real estate's going to start to get better in this area, But other than that, just, don't buy anything too big if you don't need it, but don't buy too small where, in the future you can't really do much with it, because you kind of like, you're still a young guy, but you want to have enough room where, like, let's say you do get a move-in girlfriend or whatever, y'all have some room to stretch your legs out, and you're not just buying like
stretch your legs out. What does that mean?
That means that, like, y'all can do, like, my wife snores right now, right? So I have 3 bedrooms. I'll just go to the other bedroom and sleep there, So if she's like giving me shit, I'll just be like, go in my office and close the door. Done, So you don't want to be in a position where if you're pissed off at each other, like you still got to see each other's face, Like, I need to go to my safe space, bitch. Get out of my face.
I mean, look, that's a fair point. That's a fair point.
Yeah. So it's just, like I said, these are things that you'll learn. The other thing is, don't buy anything that needs a lot of work either. because you're responsible as a homeowner. You have to deal with all the responsibilities of dealing with repairs and all that. The real question that you should be asking me though is, Kris, should I even stay in Jersey and not move somewhere else?
No, dude, I'm not moving to New York. I'm not fucking doing it as much as I want.
Not New York. Fuck New York. No.
No, I would love. Okay, so if I moved to like fucking Alabama, okay, it would be amazing because instead of paying $600K in Jersey,
I wouldn't go that far. I wouldn't go that far, man. I wouldn't do Alabama
or Florida, Georgia. Like, I get what you're saying, but I just, dude, I love the East Coast. I just like, my family's here. Everything's here in the East Coast.
I would say move to a state in a city that has a large major airport. Because, look, in the future, you're going to develop yourself into something bigger, and you're probably not going to spend as much time at home as you think. So I don't know. Like, it's up to you how you end up. But also remember, you're a podcaster now. You need to have like some studio space. So when you do buy a property, make sure it has enough room where you can build like something like Joe Rogan did, where he's got a home office with, like multiple mics and stuff, so you can do like in-person interviews. I mean, how cool is that?
Well, that's why I feel like Jersey City would be perfect, because it's not in New York, but it's close enough to New York where all the finance people are around.
I think that MKBHD guy, he has a studio in Jersey. I think.
Oh yeah, he does. That's true.
So yeah, if you can find something like, I'd say look for something industrial with some residential attached to it. That might be good.
Yeah, I've been looking at a lot more properties because I told my parents in the next like year and a half I'm probably out, and they also they understand because I want to start dating more, do other stuff. Like I'll be 28, but I think 28 is a decent time to leave. But
if I could do something over, I would buy multifamily, like a duplex or a triplex. Like when I was looking originally in Brooklyn, I wanted to buy a townhouse, but I couldn't afford it at the time because I didn't really make a lot of money. So I had to ask my dad, like, hey, can you co-sign? And he said, no, I'm not going to do it. Like, the area's like just not for me. And he just didn't trust the area. So I had to do what I had to do, and I bought my condo, but I wish I bought a townhouse. The reason why is because you can live on one of the floors, rent the other two out, and now the other two are basically paying you to live there. Right?
Yeah.
And a lot of the maintenance you don't really have to worry about because it's the general maintenance of the building anyway. So I would say buy like a duplex, which you can rent out, or a triplex, which you can rent the other two out. And now you have cash flow coming in that's going to take care of the expenses and the mortgage and everything. But then also it's going to help you build equity in the future. And the thing is, there's a lot of benefits to buying like a multifamily versus like just a single family home, and I'm sure the comment section, I'm not looking at the comment section, I'm talking to you. I'm sure they're all saying, yeah, Kris is right.
Well, yeah, no, a lot of people are agreeing with you, but I think the number one thing you would say is do not rent at all. Right?
No, I'm not saying that either. There are certain areas where it's more beneficial to rent, and then there's certain areas where it's more beneficial to buy. If you were telling me, Kris, I want to live in Manhattan, I would tell you just rent. Like, don't buy. One, you'll be paying like a crazy amount just for you to put your head on a pillow, right? And you won't get much out of it in terms of capital appreciation. And then also there's like maintenance charges in a lot of the places, like buildings in the city and stuff. They're like just too much. They're like too crazy. So I would say, if you want to live in the city, then I would just rent, because you're eventually going to move and you don't want to deal with all the other headaches of home ownership in Manhattan.
Right.
Now, if you're saying Jersey City, like, yeah, multifamily in Jersey City is actually not a bad idea. You can, rent it out to a couple of people, in the other two apartments if you get a triplex, and yeah, you could do well with that. But yeah, it's all dependent on what your future goal is also, and how many years you plan on spending there, right? And what kind of like lifestyle you want to live. Like what kind of lifestyle do you want to live? Do you want to be like a full-time podcaster traveling the world?
I definitely want to travel more, dude, to start meeting all these people that are joining these streams. So yeah, I do want to travel more, but I want to have a home base. And I feel like Jersey City, like I've been looking at a lot of properties there. Jersey City, Hoboken seems like a decent home base where I get the city life, I get the nightlife, I get the East Coast schedule, I get the access to New York without the crazy New York prices. and
Yep.
I get the financial
parking.
ecosystem
And parking.
and parking. Yeah. Yeah, parking.
Yeah. Now all of those things you'll learn over time. Like, and the other thing also to consider is like you're at a point right now where you're going to be transitioning into finding a girl and eventually getting married. One of the not want to call them mistakes, but one of the tragedies that I had to live through for the last 5 years is that I had a place in New York, but then like the girl I fell in love with and I married ended up living in Georgia, and I eventually wanted to move to Georgia. And now the thing is I had to sell my property in New York, but I also was still working in New York. So it was a pain in the ass because we were doing like a long distance relationship throughout COVID, you know? And I mean, me and my wife, we're good. We stuck through it, but I wouldn't wish that upon anyone, you know? And so if you plan on like finding a loved one, like, you know, like if you're looking for a girl and stuff and you want to like build a family, which I'm sure you do, the one thing you don't want to be is tied down to a certain area and only find girls in that certain area, you know? And like I said, it's something that you could decide and use together as a couple. Like one of the decisions that I had to make with my wife was, do we want to raise our kids in New York City? And the answer we both came to was no. So, you know, it didn't make sense to buy something in a place like we don't like right now. Jersey City is, would you raise kids in Jersey City?
I don't know.
Exactly. So that's the question. So to ask yourself like, hey, if I'm planning on marrying a girl and buying you know, and then possibly like having kids in the next 5 years, because you're at that age now where all that stuff starts to happen. Do you really want to buy a property and be tied down to the area? In which case in the future, you got to sell it and then go find something else, you know? Or would it just be better to just take that money, put it into the market, let it grow and use some of it to pay rent?
Yeah, that's a good point. There's a lot of stuff to figure out. Well, we need 2024 to end out well in the market so we have these possibilities, but let's see how it plays out. But I do think in the next year and a half, I'm definitely moving out.
Yeah. Talk to Adam Bergman, man. Adam Bergman is like the wise old sage right now.
I talk to him all the time, dude. He's smart. He's very smart on this stuff.
Bergman will give you the inside loop because he's dealt with all of this stuff. You know, he's got kids, he's married, he's lived in like the cities, he's owned multiple properties. And the thing is, like, he'll give you the insights on being a landlord too. You know, trust me, I realized a long time ago I did not want to be a fucking landlord anymore. It's just not for me. Like, to deal with all the tenant issues and headaches and stuff like that. Like, if you're a patient person, maybe you can deal with it. I personally am not a fan of it.
Dude, my dad has been a landlord for 15 years and I hate it, dude. I hate what he has to go through. So I'd rather sell options than be a landlord, bro. Like,
so there you go.
I'd rather manage fucking counter puts than fucking some random dude said the sink is fucking not working, the toilet's clogged. I'm like, all right, I'm not dealing with it.
Dude, I've dealt with that shit. It's not fun, especially if you live in a different state and then you got to figure out how to like manage. Like I had neighbors fighting with my tenant, you know.
And then you have to have a good property manager, and it's tough. It's not easy.
Yeah, and dude, property managers are hard to find, like good ones. So it's just there's so many things to it. I don't know. You'll discover your path as time goes on. You know, nothing that I can say is gonna be 100% accurate to your situation because we both live a different life. We both have different expectations of what we want to do. We both have different careers. You know, you're doing something full time. I still have a full time job. So you'll discover your path as it goes along. But the one thing I'll tell you, and this is something that I tell anyone, use your network. Ask them questions.
Yeah.
Because the more questions you ask, and I'm glad that's like I think that's one of your strong suits, and that's why your channel's really gotten good, is that you ask the questions that so many other people want to ask, but they're too afraid to ask sometimes. And so it's a learning process. And that's the one thing I agree with TJ. TJ said to you, like, oh, I've seen your progression since you started in 2021, and like you've been learning over time. So your curiosity and learning about investing has made you a better investor. And hopefully use that towards life as well. We're asking questions to people who've gone through shit, in which case now they'll give you their input. And then you you crowdsource a bunch of their opinions and then you make your decision, you know.
Right.
Making decisions in the blind is probably the worst decision that anyone could make. If you have resources around you, use them, you know.
I agree. All right, Kris, thank you. Great conversation. Chris's Twitter in the chat. Make sure you check him out. He has a Patreon as well. You guys can subscribe to if you're curious for more. And I will probably talk to you pretty soon.
Take care, bro.
Take care. Have a good one. Thank you, man. Bye. Bye. Damn, that was 40 minutes with Kris. I didn't even realize that. All right, so Fed Waller, he said some stuff. Let's get a recap of that. Yeah, guys. So it's pretty obvious that the Fed is going to cut, but we're cutting into some, at least today, weakness. 101.9 on NVIDIA, just disgusting NVIDIA action. Bitcoin as well, recovering slightly. And when I mean slightly, I mean slightly. It was at 53.7. Now it's at 54.3, still down about 4% on the day. S&P 500, nasty decline as well, down about 2%. So you got the S&P for the week. The S&P for the week is now down basically 4%. QQQ for the week is down 5.5%, and NVIDIA is down 15% for the week. We're red. We are red. Tesla's down 5%. Tesla for the week. Is Tesla still up for the week? I think it's up slightly for the week. Tesla for the week. Yeah, it's up 4%. So not bad. It's up 4%. Would have been up almost 8% if this hadn't happened today. But we're getting a little bit of a collapse. I kind of agree with Kris here. I think this is a bit of a correction based on getting valuations to reset. It's not as big of a correction on August 5th, where you saw NVIDIA go to 90 and Palantir go to 20, etc. But it's one of those corrections where the broader market is starting to price in the uncertainty of 50 or 25, but they have the certainty of the cut. And now it's just going to be a question of the next catalyst post-election and post-cut that the market looks to, which I think is going to be earnings growth. And I imagine Q3 is going to be good. If Q3 is bad, then, it's probably just not going to be a good end of the year. But if Q3 is good, if NVIDIA puts up 34 billion, Palantir grows 30%, Celsius doesn't disappoint as much as they've disappointed so far, I would imagine expectations are starting to get lower, which is good because valuations are getting lower, multiples are contracting, so expectations should theoretically get lower. But a company like SoFi, it should be closer to beating on a lot of expectations and raising guidance if we get that rate cut. But again, this is why Noto said on CNBC 2 days ago, hey, the consumer's okay. Kris also said this when he was with us. He said the consumer's doing fine, but if we don't cut decently, the consumer's not going to be okay. And some people already believe the consumer's not okay at all. SMCI down 7%. So I think the market has a lot of uncertainties right now, and it makes sense that on a Friday, it would price in all of the uncertainties to the downside, which is what we're seeing right now. Max 7 goes completely red. Amazon down 3%, Google down 3%, Meta down 2%, Microsoft down 2%, Apple down 0.5%, NVIDIA down 5%, Tesla down 6.25%. So money is absolutely leaving growth right now. And then the semis, I don't even want to look at the semis. Goodness gracious. Semis are getting hit. Semis are getting hit. ARM down 5, Qualcomm down 3, Broadcom holding up. It was down, or it's down the same amount it was down in the morning. So it's not like it got hit too much more, but it is down 10%. Intel down another 3%. Intel, dude, $18. Goodness gracious. AMD is down 4.7. Dell down 4.4. Micron down 4.2. And then TSM here down 4.2 as well. Mark says it's a shakeout. I agree. It's definitely a bit of a shakeout here. I mean, these are algos and institutional investors probably just dumping on a Friday. I really don't think this is heavy retail selling action. I think it's all, I think a lot of this is algorithmic. I think this jobs number, you have to interpret it one way or the other. The interpretation is which is a sell the news event. It's not definitely not buy based on the jobs report. Now, again, there is also the argument that this is the beginning of a recession. I'm still not in that camp yet. I don't think the jobs report was that bad to be able to assume that, all right, we're getting into a recession. And I think earnings growth is going to propel that, but it's going to be up to the market to figure out how they ultimately want to interpret the coming next 4 months. We got Goolsbie on CNBC. He's live. Let's hear from him. Let's see what he has to say. I imagine he believes we should get less restrictive. Here we go. Telling us that the guy who was trying to get the Fed to cut in July, because we know from the Fed minutes it was one of the Fed presidents. Yeah, it was him. He was probably yelling in those meetings, guys, we got to cut, but he couldn't convince them. And now we're here where we're here. It seems like Goolsbie has been trying to convince the Fed that the labor market needs these cuts, but inflation, because they've been so obsessed with it, has been the reason they've not done the cuts. And now it seems more than obvious they're going to do these cuts. You know, this, I don't know, dude. This doesn't really feel like August 5th. It doesn't feel like freak out, oh my God, everything's collapsing type stuff. It's like, it's a sell-off. It's a bad sell-off. It's not, again, Meta on August 5th was $440, right? Tesla was 188. Amazon was 153. I think we had a little bit tougher drawdowns on August 5th. Maybe next week we get into a more bloody September. That is very possible. But dude, if Robinhood goes back to 16, I'm buying a lot of Robinhood. If Palantir even thinks of going back to 23, 24, I'm buying a ton of Palantir. So if the market decides to give us those prices again, then I mean, those are opportunities that I get excited about. It's not something to be super, super scared about. I am skeptical the market's going to easily give us those opportunities like it did on August 5th, but maybe it does. VIX right now VIX should be up like 20%. Yeah, VIX is up 17% on the day. So volatility's up. Broader markets is that Roaring Kitty. Oh my God. If this day couldn't get crazier, no way Roaring Kitty tweeted. Okay, before we go, what do you think he tweeted? I didn't watch it. I didn't look at it yet. Put it in the chat. Quick, put it in the chat. What do you think he tweeted? What do you think he tweeted? I think he tweeted a meme. I think he tweeted. Fuck, dude. I have no idea. I think it's something about GameStop. I'm throwing it out. I think it's something about GameStop. Let's see. What did he tweet? Oh my goodness. It's Chewy. And it looks like he's done with Chewy. It's not about GameStop. Look at this. I think he's done with Chewy, guys. I think he's done. I think he's out. He's out of Chewy. So this is that meme. You guys know this meme? Like, I don't want to play with you anymore. It's from Toy Story. He replaced the head of the toy, of the figure, with his name is Woody, right? He replaced the head of Woody with the Chewy, with a dog, obviously a Chewy logo. I think he just sold out of Chewy. Where's Chewy right now? 25. Chewy's tanking. Chewy was down. Chewy was up in the morning at 27. I think he's out of Chewy. I think he's done. Right? I mean, like, what else? How else do you interpret this? He's probably done with Chewy. He doesn't want to play with Chewy anymore. He probably took some profits if he made profits in Chewy, which I think he did. But doesn't he have to disclose that? Because he had 9 million shares. There was an SEC form. So I think he has to disclose that because he had so much. If anyone's in the Chewy GameStop thing, I mean, look, if you're buying because of Roaring Kitty, then I don't know what to say, because that whole situation in May was fun for like 2 weeks, but it's kind of dumb. I mean, GameStop's right up 4%. Remember when he went live? He legit went live and he looked like he had a gun to his head because he kept saying, well, there's not financial advice every 5 seconds. Like, it looked like he was so scared to talk. I think that's when we knew something was up with Kitty, even though it was him. It wasn't like, a fake person. How much do you have to disclose? I think it's more than 10% of the company. And how many shares does Chewy have outstanding? He had enough to disclose. Chewy has, he had 7%. So Chewy has, it was less than 7%. It must have been like 5%. Yeah, Chewy has 418 million outstanding. I guess it was a certain level because we saw the SEC form come out a month ago. It was enough for him to trigger. Oh no, I don't think it was about the weighting. I think it was about he was the third largest quote unquote shareholder in the, I was gonna say institutional shareholder, but he's not an institution. He was the third largest shareholder behind BlackRock and Vanguard and the CEO of Chewy inside of Chewy. That's why he had to disclose. It wasn't because of his specific stake. It was just because he was up the ranks at this point. But I feel like you have to disclose. I could be wrong, but I feel like you have to disclose. GameStop now is up 6%. So if he's done with Chewy, if that's his bat signal and he's coming back to GameStop, maybe that's why GameStop's pumping on that news. This is crazy, dude. Psych Pilot says, I did a Chewy swing before anybody was talking about it. I hope it dumps the teens again. Yeah, the fun thing about Chewy is that their numbers were actually really good this year. Their earnings were great, but then Kitty got involved and it, became a meme stock. I'll go see Kitty tweet and buy GameStop. Yeah, exactly. Yeah, I don't think this is August 5th, dude. I think I don't think this is a day where you go super balls to the wall buying the dip, but I don't have an issue if someone decides to say, hey, I'm going to buy the dip today on my favorite stock, because I mean, look, if you're bullish on the market, then you're bullish on the market and you need to get into good opportunities. If you're super bearish, then you're not buying any dip, right? You think it's going to collapse another 10, 15, 20%. I still think earnings growth, which is at the end of the day, what the market is judged on, is strong. And as soon as earnings growth declines, which will maybe be a byproduct of people not having a job, therefore they can't spend money, then things will change. The bears are thinking that's already happening. The bulls are thinking that's not going to be the case. One of them is going to be right towards the end of the next 5 months. But again, some of these prices are going to get stupid. Like, I think, and the reason they're going to get stupid is because valuations have already reset for certain names. So for example, on a Robinhood was at $24.50. Now it's at 18. If it resets to 15, that becomes a stupid price. Like, especially if their growth continues. Now, if their growth can't continue, then you adjust it based on the risk. But if the growth continues, even if the growth moderates from 40% to 25%, that is a stupid price given the cash they have on hand, along with the buybacks they can do. So those become attractive. Palantir, I know, 29 to 32 is a decent premium. If it comes back down to 21, 22, given the growth, given the moat, given the sector, given the thematic, given the reacceleration of the government business, it's a stupid price. So if the street wants to give stupid prices, I like that. That's my skepticism. I don't think the street's going to give us as stupid of a price as we got on August 5th. But maybe I'm wrong. And maybe, maybe it really gets that bad if the market freaks out over the next couple of weeks. But we will see. NVIDIA's holding on to 101 by a thread, dude. NVIDIA is just like absolutely trying to hold on. I kind of think NVIDIA should just go to 95 and get it over with. Like, at this point, it looks like the algos want to take it there. The sellers want to take it there. Like, let it just drop into the 90s. And then we'll see if buyers step in. If no one steps in the 90s and it goes to the 80s, then you had a legit crash on NVIDIA. But I think the 90s, people start thinking, hey, it's NVIDIA, like people start really wondering, hey, what am I doing here? But maybe not. I mean, their Q3 guidance was good enough to, I think, justify the 4 PE, but the market's going to figure it out over the next couple of weeks. How low can SMCI go? I mean, SMCI can go back to 387. I mean, look, I mean, I don't want to call the bottom on SMCI, but I feel like it's getting there. I would not buy it because I don't believe in the margin story of the business. But to see this go to 200, given they're still growing, dude. SMCI is still growing 50%. Like, it's not like this company doesn't grow. They raised guidance by $4 billion. Problem is their margins. And so the street's going to have to figure out if they care more about margins or they care more about guidance. Chewy is now going up. It was red. Now it's green. GameStop is still up 7%. But yeah, I think those are questions, right? Like, how low can SMCI go? How low can Dell go? How low can Intel continue to go? All the semis names, it's an important question. How low really is baked in? Broadcom still down 8.85%, ASML down 5%. Like, how bad is the market going to punish these names? Or were they just so overvalued the whole year that they're taking a collapse? I don't think that's the case. I think they're getting a nice correction, a reasonable correction. And people that are bullish on the semiconductor story, which is pretty much all of Wall Street based on all the equity reports I've read, they're going to hopefully step in and continue to maintain that momentum. Now, if they start issuing downgrades on all these names, that's when everything's gone to shit. Like, if JP Morgan, Bank of America come out. By the way, NVIDIA got upgraded 3 times this morning back to 165. So, I mean, if all the big banks come out and say, yeah, NVIDIA's $90 price target, then I think it's going to shit. As soon as they give up, as soon as they think there's something wrong with the story. But from all the reports I read after their earnings, all of them are bought in to the NVIDIA thesis. So either they're dead wrong or it's not going to have that much pain. At $80, is that a PE of 20? Yeah, exactly. That's a PE of 20. Roundabout, Justin. Which is, I mean, the only reason you wouldn't pay $80 for NVIDIA for that PE is because you don't believe the earnings growth will be consequential to justify even that PE. You would think they fall off a cliff. And that's just not the case. Like, I just don't think that's based on the earnings growth we're seeing and based on the revenue guidance and the momentum, I don't think that's the case. Any price targets to buy more SoFi and Robinhood while they're coming down a little? So I've sold some puts on Robinhood, some outdated puts into 2025. But to do share purchases, 17 is where I get interested, or at least 18.5. Not 18, it's at 18.9 right now, $19. That's not really that exciting of a dip. I mean, $20, $19, $18.90. That's just that's not a moment where I deploy a ton of capital, but 18.5 or low 18s and then high 17s, that's where I get a bit more excited. For SoFi, I think anything under 7 gets exciting, but I'm only saying that because SoFi has been above 7 for a while, but we have to remember SoFi was below 7 for months. So I'm like, I like below 7, but the problem is if it gets comfortable in that range, that's not going to be exciting because it was in limbo below 7 for a good 4 or 5 months until it finally broke out. So, I mean, real load the boat on SoFi to me is more 650, not like 690s. But I don't know. I don't know if the market's going to let us get there. I think there's a decent amount of people buying the dip. We don't see it in the prices right now, but I think there's people that have been waiting for some of these prices. And although September is volatile, bloody, we don't know how the rate cut, the market's going to react to it. I do think there are people stepping in right now, and they're getting a little bit, but it's not enough for some of these stocks to go green. Google, by the way, talking about PEs, Google 19 PE, bro. It's at 150. It's at 1 freaking 50. Let me check the cash secured premiums on Google. How much is the market willing to pay on puts on Google? So if we were to go October 25th, so about 2 months out, sell put, we're looking at 130. Actually, no, let's do October 18th. That's more reasonable. Yeah, October 18th. I mean, the premiums are not bad. They're not horrible. At 145, market will give you $305. So that's it's 2% returns, 1% a month. Yeah, the put premiums are still not amazing. Again, it's a large cap tech. So the put premiums usually aren't amazing on large cap tech because there's not as much volatility. So selling puts doesn't feel that attractive. But if Google gets down to 140, dude, I mean, at the end of the day, this is a company doing 80 billion of profits a year. If it would be trading at a 12 to 15 PE, I feel like even if you're bearish Google, you don't, I mean, even me, I would say, hey, that's like, this is, if it gets to 140, this is stupid. But we'll see if it gets there. What stocks would you consider buying at August 5th? Palantir and Robinhood. It's just that simple. I mean, if Robinhood gets back down to 15, Palantir gets to 20, even Tesla gets back down to 175, like those are Meta gets to 440. Dude, these are no-brainer prices. I mean, August 5th sentiment, I think, is the right sentiment to have in terms of these dips being juicy. But I don't know if we get August 5th prices based on this report. NASDAQ's down 2.5, Celsius down a third, S&P down 1.6, and then Google down 3.4. So the last piece of news we have for today, which I'll get on the market close at 5:15, is Palantir. And now it's a totally different macro rolling into this S&P inclusion because the jobs report was, at least interpreted by the market for now, as bearish. So we'll see if that inclusion actually does have an impact on Palantir or if it really doesn't impact Palantir at all. Amit, do you use ChatGPT or any other AIs? I've been using Perplexity a lot. And I really like it. And that's why it's hard for me to justify buying Google as I'm using Perplexity because I'm looking at the future in my hands. Like I'm literally looking at the future in my hands. And, you know, there's so many reasons why Google has a moat and all this stuff. But based on how I've been using it, it's just, I'm using it every day now. And I'm like, when I think of searching something, I go to Google and then I just leave Google and I go back to Perplexity. And I'm like, wait, Google's going to give me a bunch of links. I just want the answer. And I go to this. Now, granted, I don't think this is enough to dethrone Google at all. But, and I'm not bearish Google, but I understand why they're struggling a little bit more. I ask because I've been using ChatGPT more than Google lately. I understand. You're concerned about your productivity. And it's not productive looking through some random websites for the answer. It's more productive just getting the answer and moving on. So I think that's fair. When you search for something like a place to eat near you, where do you search? That's a good point. I haven't used Perplexity to search like food near me. I haven't done that yet. I mean, let me try that right now. Let's see what it pulls up. I've never even thought of doing that on Perplexity. And that speaks to how ingrained Google is still in our lives. Food near me. Let's see. What does Perplexity pull up? Yeah, this kind of sucks. This absolutely sucks. This is trash. This is not the same experience. All right, so the food near me, Perplexity cannot do that yet. It thinks I'm in. It kind of thinks I'm in Staten Island, and I already turned on location. So I'm definitely, this thing needs an update. Yeah, so that's probably where Google's going to continue maintaining momentum. But on like knowledge-based questions, Perplexity, ChatGPT have been doing a lot better. Boomers are going to use Google for the rest of their life. Well, dude, it's going to be hard to get people off Google. It's going to be hard. 8.5 billion searches a day. It's not easy, which is why their search business is going to keep thriving. I think it's down because of the DOJ stuff, not really because of AI. But it's one of those long-term things to consider when developing a position. SoFi below 7. There you go. Down 4.2%. There it is. Down below $7. S&P at 540, 20 cents away from being below 540. Tesla 216 just got demolished today. CrowdStrike demolished, down 4%. Meta holding up above 500, but it's still down 2.4. Robinhood was $20 in the morning, $18.91 now. DocuSign, shout out to Steve. DocuSign's up. So we got DocuSign having some momentum. And then PayPal right here at 68.9. Wow, PayPal's down 5. PayPal's below 72. That's not the best for PayPal. Going below 70s is not good. That one's down 4.3. It does feel algorithmic, dude. If every single stock is down, I think below, at least some of them below their 50-day moving averages, the others below their 200-day, then this is definitely more algo driven in my opinion. And it, on a jobs report and on a Friday, this is what you'd expect. I don't even want to look at CleanSpark. CleanSpark's down another 5%. Yeah. MicroStrategy is probably down 6%. 3.4%. And then Coinbase probably down 3%. Coinbase down 5%. There you go. There you go, folks. All right. I think that's it for me. I'll be back at 3:45 for the market close. We got a big market close with Palantir. Now, remember, if you're joining for the market close, we don't get the Palantir information until 5:15. 5:15. I remember last time a lot of people joined and they're like, "Where's the news?" And I'm like, "Guys, you're stuck with me for an hour. Like we got to wait till we get the news." So if you only are coming for Palantir inclusion, come at like 5:00, and then you'll get to see us freak out for 15 minutes. But if you're coming for the general market close, then we'll be there for the full hour. Let me text Arnie. Are you joining for S&P stream? Arnie might be with me. If not, I'll try to see if I can get some other people with me as well. All right, that's it. Thank you, everybody, for being here. Why Perplexity over ChatGPT? It's just faster at giving the answers. That's all. It's just faster. That's why I'm using that one. That's pretty much it. All right, thank you, everybody. I'll see you guys 3:45. We'll be back. We'll see what happens. Bloody day. Let's get some food, relax. We'll be back. Let's see if Palantir can get included. If not, it is what it is. Let's end out this week. Tough week, first week of September, but this is kind of what we got to go through to get through the end of the year. All right. Bye, everyone. Have a good one. Thank you all for being here for the past 3 hours. I'll see you guys at 3:45. Bye, everyone.